Greetings and welcome to the GameStop fourth quarter and fiscal 2020 earnings call. At this time, all participants are in a listen-only mode. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Eric Cerny, Investor Relations. Thank you, Mr. Cerny. You may begin.
Thank you and welcome to GameStop's fourth quarter and fiscal 2020 earnings conference call. This call will include forward-looking statements which are subject to various risks and uncertainties that could cause actual results to differ materially from expectations. Any such statements should be considered in conjunction with the cautionary statements in the safe harbor statement in the earnings release and risk factors discussed in reports filed with the SEC. GameStop assumes no obligation to update any of these forward-looking statements or information. A reconciliation and other information regarding non-GAAP financial measures discussed on the call can be found in the earnings release issued earlier today, as well as the investors section of our website. Joining me today is GameStop's Chief Executive Officer, George Sherman. On today's call, George will share insights into our business and strategic framework for the future, followed by a review of the financial results and strategic direction as we head into fiscal 2021. Please note that we will not be conducting a Q&A session as part of today's call. Now, I would like to turn the call over to the company's Chief Executive Officer, George Sherman.
Good afternoon, everyone, and thank you for joining us today. Before reviewing our results, I'd like to take this opportunity to personally thank our entire GameStop team for all that it has accomplished over the past year. Throughout the year, we worked incredibly hard to meet our customers' needs whenever, however, and wherever they chose to shop amidst the pandemic-impacted backdrop. I'm so grateful for our team's dedication to our customers and our brand. Fiscal 2020 was an unprecedented time. Our full-year results reflect our organization's adaptiveness and focus on navigating orders that ship from stores, assisting with online orders, and offering advice to customers in store. During this time, our top priority was safeguarding the health and well-being of our associates, customers, and communities. As you recall, we closed the majority of our global fleet during the height of the pandemic, resulting in a significant reduction of operating days compared to 2019. When stores were allowed to reopen, we operated under limited hours and at reduced capacity in many locations. And in several of our operating countries, returned to full store closure protocols later in the year. During this time, we worked diligently to plan for safe reopenings and introduce more members of GameStop's loyal customer base to our e-commerce capabilities. In terms of operational initiatives, we accomplished the following in fiscal 2020. We delivered a 191% increase in global e-commerce sales to represent approximately 29% of total net sales, up from a low single-digit percentage historically and reflecting investments during the year that enhanced our e-commerce capabilities. This growth allowed us to recapture a substantial majority of our sales from temporary government-mandated store closings and leveraged our improved fulfillment capabilities, including the initial rollout of same-day delivery and several flexible payment options, which helped to facilitate sales and improve the shopping and delivery experience. Deliver over a $400 million reduction in our reported year-over-year SG&A expenses as a result of ongoing cost optimization efforts. This, combined with an SG&A reduction of $130 million in 2019, adjusted for severance and transformation costs, has resulted in a total SG&A decline of over $530 million over the last 2 years. We continue to transform our physical store presence through ongoing market optimization and global de-densification efforts. This resulted in closing a net 693 stores and reduced store operating costs for the year, while transferring some of the sales online into neighboring locations. We enhanced our financial position and flexibility with a stronger balance sheet, reflecting significant improvements in inventory management and related working capital, a healthy overall cash and liquidity position, a material reduction in overall debt, and the completion of an exchange offer for our March 2021 notes. Overall, we're pleased with the work we accomplished to achieve our objectives and stabilize and strengthen our business operations. That work will continue, particularly as we explore options for our European businesses, which may include further store closings, exiting unprofitable businesses, or investing in e-commerce capabilities. As we go forward, we are focused on transforming into a customer-obsessed technology company that delights gamers. We are working to create a differentiated customer experience that positions us to access new customers, further engage with existing ones, and reactivate former ones. We are maintaining an intense focus on initiatives that drive customer lifetime value. Steps we are taking to execute on this mission include 1. Investing in technology capabilities, including by insourcing talent, revamping systems, and evaluating next-generation assets. We continue to build out our team expertise in this area, noting our recent addition of a Chief Technology Officer and Chief Operating Officer to the senior leadership team. 2. Building superior customer experience, including establishing a U.S.-based customer care operation. We are focused on providing exceptional customer service levels across all channels, regardless of where, when, or how our customers shop with us. We are accomplishing this with a technology-driven approach, along with leveraging our streamlined retail footprint to provide an unparalleled service proposition with a focus on surprising and delighting our customers. To this end, we have recently added a Senior Vice President level head of customer care and other new additions with e-commerce backgrounds to the senior leadership team. 3. Expanding our product offerings. We are continuing the work to expand our addressable market by growing GameStop's product catalog. This includes growing our product offerings across PC gaming, computers, monitors, game tables, mobile gaming, and gaming TVs, to name only a few. These categories represent natural extensions that our customers would expect to buy from us, expanding our addressable market size by over 5 times, and over time, will reduce our reliance on the cyclicality of the console-based gaming market. 4. Modernizing U.S. fulfillment operations to improve speed of delivery and service. We are improving our distribution network to coincide with the continued optimization of our store footprint. This will enable us to provide customers convenient, flexible, and competitive delivery options across the entire product spectrum. With our recent additions to the senior leadership team, we are quickly evaluating additional distribution options to improve delivery speed. This group is also working to further optimize our warehouse management and order management technologies and other capabilities that will improve the experience for our customers. We expect to accelerate these and other elements of our transformation while continuing to focus on allowing the company to build upon its progress and capitalize on the emerging console cycle. The progress we have made over the past 2 years positions GameStop for long-term growth and to deliver value for shareholders. Now turning to financial results. I'm very pleased with how we navigated a challenging environment and all that we achieved in the fourth quarter in fiscal 2020. Specific to our fourth quarter results, sales were $2.1 billion and comp sales increased 6.5%, supported by mid-teens positive comparable sales in fiscal January. Global e-commerce sales increased 175% and represented 34% of total sales in the fourth quarter versus 12% of net sales in the prior year period. These results were reflective of the increased console demand as we transition from Generation 8 to Generation 9 console gaming products from Microsoft and Sony. Our 6.5% comp growth marks our return to positive quarterly comp sales growth, which we achieved despite further COVID-19 mandated closures around the world, particularly in Europe, the most challenging industry-wide shipping crisis realized during the holiday period, and severe supply limitations of new products. Notably, console demand remains more robust than we can meet with supply from console makers, and as a result, we continue to see sell-through rates for our console events in a matter of minutes. In the fourth quarter, we estimate that additional pandemic-related store closures mandated by local governments led to a reduction of approximately 27% in European store operating days versus the prior year fourth quarter. Regionally, Australia was the strongest performing region given minimal disruption to stores and delivered a nearly 30% comp increase. Building on that momentum, 2021 is off to a great start, led by positive 23% comparable sales in February as we continue to benefit from the launch of new consoles and the accessories and games that come with that product. Further, total consolidated sales for February were up 5.3% versus last year, despite having permanently closed about 12% of stores globally through de-densification efforts and losing over 36% of store operating days in our international business units, primarily in Europe, due to pandemic-related temporary closures in the month. From a product margin standpoint, overall gross margins were 21.1%, down 610 basis points from our more software-led 27.2% gross margin in the fiscal fourth quarter last year. The decline was driven by an expected increase in mix of lower margin hardware sales, a continued increase in industry-wide freight costs, credit card processing fees driven by our higher penetration of e-commerce sales, and a broader promotional stance. Now turning to our expenses and expense management objectives. Our reported SG&A expenses were $419.1 million, reflecting a decline of approximately $92.6 million or 18.1% versus the reported SG&A in the fourth quarter last year, and representing approximately 340 basis point improvement on a percent to sales basis. The decrease was driven by a combination of tight expense controls, particularly lower store costs and corporate G&A expense, and to a lesser extent, sales leverage. On an adjusted basis, SG&A declined $68.4 million or 14.1% year over year. We reported operating income of $18.8 million on a reported basis compared to operating income of $75.2 million in the prior year fourth quarter. Adjusted operating income was $28.9 million compared to $109.2 million in the prior year period. Income tax in the fourth quarter was a benefit of $69.7 million, driven by a change in the tax status of certain foreign entities based on a certain check-the-box elections that we made, along with the impact of the CARES Act, which allowed for a 5-year carryback period for certain current year tax losses. This tax benefit compares to an income tax expense of $43.8 million in the prior year fourth quarter. On a reported basis, net income was $80.5 million or $1.19 per diluted share on 67.8 million shares, compared to net income of $21 million or earnings per diluted share of 32 cents in the prior year fourth quarter. Adjusted net income was $90.7 million or $1.34 per diluted share, compared to adjusted net income of $83.8 million or $1.27 per diluted share in the fiscal 19 fourth quarter. In the fourth quarter, we continued to focus on de-densifying and streamlining our global store fleet. We closed a net total of 232 stores in the quarter for a total of 693 closures in fiscal 2020. At year end, we operated 4,816 global stores. Now turning to our full year results. Total consolidated sales were $5.1 billion, a decline of 21.3% over the prior year. The sales decline was attributed to a comp store sales decline of 9.5%, approximately 700 permanent global store closures, disruption from the pandemic around the world, including temporary store closures, vendor supply shortages in the new Generation 9 hardware, and a lack of new product at the end of the Generation 8 cycle. E-commerce sales increased 191% for the fiscal year to represent nearly 30% of total net sales. Gross margin for the fiscal year decreased 480 basis points to 24.7% from 29.5% in 2019. SG&A expenses for the fiscal year were $1.5 billion, reflecting a decline of $408.5 million or 21.2% versus reported SG&A in fiscal 2019. On an adjusted basis, SG&A declined $348.9 million or 18.9% year over year. Importantly, these expenses include approximately $25 million in COVID-related safety protocol costs. As we said before, we continue to expect more than 2/3 of these reductions to be permanent, as they relate to permanent closures of stores and related labor costs associated with our dedensification strategy. We reported an operating loss of $237.8 million compared to an operating loss of $399.6 million in the prior year. Adjusted operating loss was $238 million compared to operating income of $62.3 million in the prior year. Income tax for the year was a benefit of $55.3 million, driven by the changes in tax status of certain foreign entities and the impact of certain carryback provisions of the CARES Act previously mentioned. This tax benefit compares to an income tax expense of $37.6 million in the prior year. Our effective tax rate for the year was 18.9%. Importantly, we believe these tax elections will yield between $125 and $150 million in cash tax benefit to be received early next fiscal year. On a reported basis, our net loss was $215.3 million, or a loss of $3.31 per diluted share, compared to a net loss of $470.9 million, or a loss per diluted share of $5.38 in the prior year. Our adjusted net loss was $138.8 million, or a loss of $2.14 per diluted share, compared to adjusted net income of $19.1 million, or 22 cents per diluted share in fiscal 2019. Turning to the balance sheet, at the end of the fiscal year, we had cash and restricted cash of $635 million, $121.5 million higher than the end of last year, reflecting our continued efforts to optimize working capital and overall capitalization of our balance sheet. We ended the year with total inventory of $602.5 million, a 30% reduction from prior year inventory levels of $859.7 million. As a result of our ongoing inventory management efforts, our inventory efficiency continued to improve through the fourth quarter as we realized a trailing 12-month inventory turn of 5.9 times versus 4.4 times at the end of 2019. At the end of 2020, our balance sheet and liquidity position were significantly improved versus 2019, despite the impact of the pandemic. This was the result of actions we took to strengthen our financial health in 2020, including completion of an exchange offer and consent solicitation for $216.4 million of our unsecured notes, reducing the amount due to mature in 2021. Execution of 5 sale-leaseback transactions related to office buildings and the sale of a corporate travel asset, contributing approximately $95 million towards total liquidity. And the reduction of overall debt for the year by $57 million, including the early redemption of $125 million of our remaining March 2021 notes. Additionally, as of March 15, 2021, we fully redeemed the remaining $73.2 million of 2021 notes and repaid the outstanding balance of $25 million on our ABL. Capital expenditures for the year were $60 million, at the low end of our previously provided guidance of $60 to $65 million. In fiscal 2020, cash flow from operating activities was an inflow of $123.7 million, an increase of $538.2 million compared to an outflow of $414.5 million during the same period last year. The increase was primarily due to improvements in working capital as a result of optimizing inventory and accounts payable levels through maximizing the cash conversion cycle and more efficient carrying levels of inventory. In terms of our outlook, we're optimistic about our transformation in the emerging console cycle. We recognize business risks remain elevated due to the pandemic and post-pandemic uncertainty. We are not providing specific annual sales and earnings guidance. In summary, 2020 was an unprecedented year, but we're very proud of all that we accomplished to advance our strategic priorities and enhance our financial health. We finished 2020 a stronger company and are well positioned to capitalize on the opportunities ahead of us in 2021 as we move to the next phase of our transformation. GameStop is the only retailer of scale exclusively focused on the gaming industry and adjacent categories. We have a unique opportunity to become the ultimate destination for gamers. I want to take a moment to address several changes to our leadership team. As you know, we announced in February that Jim Bell was stepping down from the CFO role with the company later this week. I want to thank him for his significant contributions to our company during the stabilization and optimization phases of our transformation, particularly his leadership in managing several $100 million in expense reductions and over $350 million in working capital generation. We also announced this week that Frank Hamlin, our Chief Customer Officer, is leaving the company, and I'm very appreciative of his leadership and efforts over the last couple of years of our transformation. Specifically, his spearheading the concept development and execution of our Tulsa project of interactive gaming stores. Finally, we are very excited to welcome Jenna Owens as our new Chief Operating Officer. We believe Jenna's extensive career in technology-led organizations, such as Amazon and Google, are another important addition to our leadership team and our future transformation initiatives. Thank you again for your support and interest in GameStop. We remain very excited about the momentum we have, the many positive changes we are making, and the talent we are attracting to GameStop, all of which we believe will deliver long-term value creation for our stakeholders.
This concludes today's conference. You may disconnect your lines at this time. Thank you for your participation. Have a wonderful evening.
Wait, that's it? That is the world's shortest conference call. I can't believe they just ended it like that. That's crazy. Hold on a second. Let me. Oh my god, that was funny. I was expecting some sort of announcement by the leadership team about Ryan Cohen. I would have liked to hear Cohen speak. But that was just weird. This ended it. It's almost like they don't want to screw up a good thing. I don't even know. That is crazy. Let me set up my camera here. Oh man, it's not even in the right place. Hold on a second. God. Thank you guys so much for joining the stream here. If you're new to the channel, make sure you hit that subscribe and bell for notifications. I am Smash JT, and I've been covering GameStop for over a year now. I bought into it back when it was at $4. I bought more of it when it got to $18 after I heard about Cohen. And I did deleverage a little bit, but for the most part, I am still holding a very good amount, and I feel very good about the future prospects of this company. Man, my kid had my headset and totally bent it. Oh man. So thoughts on the call? Thoughts on what's going on with GameStop right now? I mean, I wouldn't be surprised to see a dip here. I mean, you can already see it happening. Oh, thanks for the donation, Bruce. It's what's it at, like 160 or something right now. But I don't even take that seriously. I really don't. I feel like this is not reflective of what the conference call stated, what the earnings are. The earnings were good. I mean, in my opinion, overall, based off of where they were relative to this a year ago. They paid down their debt. They got Ryan Cohen in charge. They're looking to build a U.S.-based customer care operation, which is huge, huge news. He wants to build a superior customer service experience. They want to make this the Chewy.com of video games. That's Ryan Cohen's whole MO. And I think he has a good chance to make it happen. I mean, obviously, there's a lot of unpredictable variables along the line, but it's something that I believe in still to this day. I wish I bought more back when it was at 4, and I wish I doubled down when it went to 2, but hey, you know, if you could see the future, we'd all be billionaires and the world would be a very different place. But I thought it was so weird that they didn't take any questions at the end of that call. I've listened to a lot of conference calls in my life. I'm big into business. I enjoy it. I went to college for business management, and I like this aspect of the video game industry. And I've never, to my immediate recollection, have ever heard a conference call that didn't take questions at the end of it. I'm sure it's happened before, but personally, I've never seen it. I thought it was really strange that they just kind of gave the information and said that they're not taking any questions and just ended it. It's kind of weird. I don't know though. Maybe it goes in line with Cohen just wanting to avoid the naysayers, because for those of you who have been following GameStop for a long time, you know that the representatives, the Bank of America reps, the who's it, Morgan Stanley reps, whoever they were, asking very pinpointed questions, trying to make GameStop look bad, to paint them in a bad light, the way that they angled their questions. And I kind of take this as Ryan Cohen saying, screw it, we're just not going to take questions from them because they just want us to fail. So what's the point of even listening to them? What's the point of even bothering to answer them? Let's make our actions speak for themselves instead of playing into their role of manipulating the stock. That's kind of the way I'm looking at that. But man, what a balls move! What a balls move! Like that's someone who doesn't care about any repercussions. They're just like balls to the wall. I'm doing it my way. F y'all, you know. That's how I took that. Share price is falling. We're down to just over 150 right now, 153 at last check. And I mean, I'd like to say I'm surprised, but I'm not. I was talking to a couple of my friends about this leading up to today, and I was fully expecting a wild swing, and I was almost expecting it to the downside immediately. But I think the near-term future after this conference call, I feel like there will be a bounce back. I mean, whether there will or not remains to be seen. But that's just kind of the vibe that I'm getting from all this. A lot of the times the tanks, it feels like it's manipulation. And I was saying that, if you guys have watched my videos, I've been saying that since the first time it crashed down to $38, and I bought more at 38 because I'm like, this is ludicrous. This stock deserves more than the credit it's getting. And I think a lot of it is based off the short selling, and a lot of it is based off of the FUD, the fear, uncertainty being put out there in the market. I'll never forget the article that we saw, the OG GME gang, back when we hung out in Roaring Kitty streams. When it was like the 14 of us in there. And there was an article that someone posted on Seeking Alpha that was like 5 stocks that definitely won't double in 2021. And GameStop was one of those. And that's back when it was at like $20. And like, it definitely won't double in 2021. It was like, well, it didn't double. It did a hell of a lot more than that. So it's kind of funny how people, the professionals, seem to act like they know what they're doing, but ultimately nobody knows. Nobody knows. And if they do, if they say they do, they're lying to you. So as far as my overall thoughts of the call, I thought it was a bit short. Like I said, I would have liked them to go into a little bit more detail on what their bullet points are. They just kind of listed off bullet points of what they plan to do, but then they didn't really go into any depth. I saw someone just say they said they'd take questions at the end. I heard them say that the opposite. I heard them say that they weren't taking questions at the end, but I don't know. There was a lot of miscommunication right at the beginning of the call. I was trying to set up my computer and hoping that it wouldn't crash right when the call was starting. You guys heard it pause for like that 5 seconds, and I'm like, why is it not making any sound right now? What happened? And then my computer just caught up with it. I was like, okay, that kind of gave me a mini heart attack there. But Again, if you're new to the channel, make sure you hit that subscribe and bell for notifications. Check out my backlog of GameStop videos. I've made plenty of them. I am one of the biggest GameStop bulls out there and have been since back at $2. And I don't see that changing anytime soon. Ryan Cohen taking the helm. I only see great things in the future. There are no guarantees, like I say, but I mean, this is exciting times we're living in with this. And there's a ton of catalysts in the video game industry to take this thing to the moon. So we got, it's going up now. It was at 153 at last check. Now it's at 156. So it's bouncing back a little bit here, 157. I wouldn't be surprised to see a bounce at the open tomorrow, too. I feel like this is kind of an overreaction right now. Someone said thanks for the discount. Yeah, this is, to me, this is very cheap to get in. If it's at the open tomorrow, I might be tempted to buy even more because it's just the way the stock is going. It's some serious wild swings. It's not for the faint of heart. So, well, we're back at 160. There we go. Let me see. Lots of trolls in here. Yeah, I mean, I wouldn't be surprised if it's lots of bots too. That's something we dealt with back when GameStop was at like $20 and Ryan Cohen was taking over, or at least joining, however you want to say it, joining the board of directors over at GameStop. And there were articles like smear campaigns on GameStop that whole time. Everyone just wanted them to fail, as it got found out later, Melvin Capital, Citadel, in bed together, and Vlad from Robinhood in bed together. Some weird trifecta there. But as time has gone on, we've realized that, you know, the people do have a lot of power here. People say it's the institutions, but hey, what's up, Level 1 Online? But, you know, don't pretend that we don't have any power either. I think the Reddit revolution is real. I think it's funny how CNBC tries to paint that in a negative light. I'll never understand why. It doesn't make any sense to me. Like, why is it a bad thing that people are discussing companies, doing their due diligence, airing it out, and having their peers discuss it and you know, see what makes sense and what doesn't, and come to some sort of resolution and conclusion with all of it. And CNBC looks at that as like, oh, a bunch of kids. They don't know what they're doing. They're wrecking the stock market. They're wrecking all our 401ks and retirements. Like, no, we're just researching and investing and winning. And you're mad and you're jealous and you're trying to get laws passed against us. Like, it's crazy. It's crazy. But yeah, we got 7,300 people still in here. We had, at the peak, I think it was 24,000. Somebody said that it was trending on YouTube trending, which, if that's the case, that's cool. That would be the first time that ever happened to me. I wasn't able to verify that, but that's pretty cool. What else? I keep going back to, I'm just surprised at how quick that call was. Like, I was full on expecting, I personally was expecting Ryan Cohen to talk. I was expecting his a more succinct roadmap for the future. And like I said, they just gave a bunch of bullet points on what they're planning on doing, the 2021 strategic initiatives, investing in technology capabilities, including by insourcing talent and revamping systems, and evaluating next-gen assets. So what does that mean? Investing, so that means they're putting money into technology capabilities. And trying to read between the lines, insourcing talent. Insourcing talent. That's weird verbiage. From what I grasp, is they're bringing in people and paying for those people to come in and assist with new technology capabilities internally at GameStop. And those people will be also revamping the systems, because I'll be honest, the GameStop app is clunky. Even though they revamped it already, it's still not great. There's still a lot of glitches with it. And evaluating next gen assets. What does that mean? Next gen assets. Are they talking about things connected to next generation consoles? Investing in technology capabilities, evaluating next. I mean, this is so cryptic. It's so cryptic. It's like they don't want to show their hand on what exactly they're doing still, which kind of tells me that they're just going to randomly announce something big. Like that's what, if I piece the crumbs together, that's what I get from that. I could be completely wrong, but that's what I'm getting from that. Oh, DFV is still in. Nice. Roaring Kitty is still in. I mean, I'm not surprised, but that's good to hear. Building a superior customer experience, that kind of goes in line with this bullet point down here. Establishing a US-based customer care operation. Which is huge. That's something I talked about in my videos way back in the day when this was at like $12 a share. And I'm like, they need better customer service because it was very bad. Their image and the video game landscape was terrible. They got knocked by YouTubers all the time. People making complaint videos and how terrible their experience was. They post on Twitter, things like that. And they still to this moment, as far as I can tell, up until at least yesterday, I saw someone complain on Twitter that they bought a new game at GameStop and it came unwrapped because it was like a store display one that they opened up and took the game out so that someone wouldn't steal it from the shelf. And I'm like, they got to stop doing that kind of stuff. You can't sell a new game as new if you've opened it. That is like point number one. Ryan Cohen, if you watch this, don't do that. That's bad. Expanding product offerings. This is interesting. That goes in line with the omni-channel. Expanding product offerings. So right now they've already expanded into going into a lot of PC parts and also Vizio TVs and Vizio surround systems and sound systems. They did sign an exclusive deal with Vizio for that kind of stuff. But they don't say what they're expanding into here. They're just expanded product offerings. So interested to see what that is. I did make a video previously talking about how they could potentially turn some of their stores into PC building centers, which could theoretically be that. But I would have liked them to expand on that in the call right now and say that's what they're planning on doing. It's so cryptic, though. It's so cryptic. Modernizing U.S. fulfillment operations to improve speed of delivery and service. That is huge. That's basically the chewification of GameStop right there, is getting stuff to the end user faster. They said it in the call that it included PC hardware, monitors, TVs, etc. Okay, I missed that, so thank you, Sam. PC hardware and VR. Okay, I don't know how I missed that part, but thank you guys. Appreciate it. That's why I appreciate having the chat here to catch me. The stores are already turned into fulfillment centers at some point, at some places. But it would be nice to, for example, why should I buy a game from GameStop and also pay for shipping when I have Amazon Prime and shipping's free? And it's, I believe, correct me if I'm wrong, but I believe it's release day guaranteed. And same with Best Buy. They do free shipping on the games. I think GameStop is starting to do that when it's over $35. But the problem is they don't guarantee it on release day. And that's an issue. Like I got what was it, Super Mario 3D World and Bowser's Fury for my Switch, and it came like 5 days after launch day. And I have a Best Buy rewards card, and I buy stuff from Best Buy, and it's free shipping, and it gets delivered on release day, and I get points in my account towards it, so I can save $5 on the next game when I do that. So that's what GameStop needs to work towards, and they need to do that sooner than later. You know, one thing I was kind of expecting out of this call. No, Amazon Prime does cost $129 a year, but I'm saying if you're a customer that buys games and you already do have Amazon Prime, just for the people that are already paying for Amazon Prime already, then they're going to just go with that, unless GameStop can give people a reason to get them away from that. I'm not talking about the people that don't already have Amazon Prime and that would just proactively pay $130 for no reason. Modernizing U.S. fulfillment. But one thing I was expecting out of the call was that they didn't do was the shelf offering that's still there. That they had, they could sell, what was it, 100,000 to just put it out there right away, free money. They don't need it, and they're not doing that. That's pretty powerful. And by them not doing a stock offering or announcing shares being put out there, I'm surprised that the stock didn't react positively and go up just off of the lack of a stock offering news. You know, like, that's kind of weird. Because I remember being in GameStop back when it was at like $24 or $26, and they announced the shelf offering, and it fell to like 14. It's like they didn't even do an offering. They just announced that they have the ability to do an offering in sometime in the future, and it took like 40% off the stock right away. And it's just funny to me that it was being so manipulated back then, and now it's at this $161, and they're not doing an offering, and it's not going up. That's weird. That's weird to me. That's weird. Hedgies are hitting it after hours, no biggie. Yeah, I mean, I wouldn't take this price action too seriously right now. I would take it seriously if it fell to like 100. I'd be like, ooh, that's pretty sketch territory. So, I mean, the whole stock market is absolute garbage this past week and a half. It's been terrible. Everything is just, in the stock market, it's just falling. GameStop, if anything, is holding strong. And we're back in the 160s. So, I mean, it fell, I think the low was what, 152, 151? And now it's bounced back $10 since then. My biggest concern coming out of this conference call was, like I said, if it fell to like 100 or 110 or 120, I'd be like, ooh, that's a hard fall. It's going to be tough to come back from that. But this 10%, give me a break. GameStop, if those of you who are invested in GameStop for a while should be used to a 10 to 20% move on the daily intraday at this point. So this is just kind of, just makes me smile. It doesn't even faze me. I think the real people that are concerned out there, ironically, are the trolls, are the people that are begging for this thing to fall because they're like, it should fall. Why should it fall? Because it's too expensive. That's your due diligence. It's too expensive, so it should fall. I mean, there's a reason why it's trading at what it's trading right now. There's actually a lot of reasons. And there's a reason why it fell the first time. I'm not saying it's impossible for it to fall back to $38, but I would be very surprised if it did. We'll put it that way. I wouldn't be surprised if it fell below 100, though. Like, if it falls into the 90s or 80s, I wouldn't be surprised at that. It would suck for me and everyone in here that's holding, but it would be something that I'm like, okay, it's trying to find its fair value, and this thing has been so manipulated for so long that the stock literally has no idea what it should be valued at. Rod Alsman, the guy behind GMEDD.com, has done a fantastic job elaborating as to why it's valued at what it's at right now and why that price is justified. And the mainstream media can't stand it. If you watch CNBC, I saw them the other day, the first time it started falling. I don't know how many of you guys watch any upcoming catalysts we can look forward to. Restock of next-gen consoles is probably going to be one of the biggest ones. But I hate to say this, but honestly, one of the biggest catalysts for GameStop right now is their maneuverability. The transformation that they're undergoing right now with Ryan Cohen and the money that they have behind them right now and the ability to purchase a gigantic organization and put it underneath the shell of what GameStop is, underneath the umbrella, that's monstrous. I don't want to like speculate too far, but just like, for example, what I'm saying is like they're not going to do this. Quote me, they probably will do it now, but they're not going to do this because I don't think they'd even have the money to do it. But say that they bought Steam or Valve, which Valve is worth almost as much as GameStop. Maybe not now because of GameStop's rise, but Valve is a very valuable company, and that is a digital first PC gaming console. Basically, it's a revolution for PC gaming, and if they were to dip their toes into that, I should say dive in, not dip their toes, but dive in and buy that, they would open up an entirely new revenue stream that would transform them even more for the ages, where it goes from a physical store to digital. Again, probably not going to happen, but just an example, because what the big catalyst is from this and what's so exciting is that we don't know what Ryan Cohen's going to do. We are investing in our belief that he is going to do what's right and bring this stock to the promised land. We are paying a premium for that right now in hopes that that's what it transforms into down the road. And that's something, for some reason, mainstream media can't understand. Like, they have a problem with people speculating on stocks. It's like, that's what investing is. It's speculation. That's all investing is. People aren't investing on the value of a company. They're investing on the speculation of what's going to come in the future from it. And that's why GameStop is so exciting right now. At least that's why I am still invested in it, because I see a future that mainstream doesn't see right now. And it's going to be one of those things, if it comes to fruition, that they're just going to be like, oh, yeah, okay, that makes sense. That's what they bought. That's why they're worth that now. Okay, I understand the valuation now. It's like, yeah, of course you do. But where were you when people were buying into it under just the belief that that's what was going to transpire? You were nowhere to be found except you were knocking it, Jim Cramer. As much as you pretend to be on our side, we all know you're not. Carl Quintanilla, no. I mean, literally any anchor on CNBC, there's not one of them that stands out as somebody that actually cares about the little guy. They are all bought and paid for by Citadel. But as far as to answer your question, it's an impossible question to answer, upcoming catalyst, because the upcoming catalyst is something that we can't see. So that's what's so exciting and equally scary, and also why the stock is just bouncing around like it is. This I say to you, need to understand how corrupt the media are, and they totally get it. Trust me. I've talked to my brother about this a lot too, because we're both investors, and I always knew the media was corrupt. But until GameStop happened, I never knew just how corrupt they were. Like, GameStop exposed so much corruption to the core that it exposed everything from media manipulation to Robinhood manipulation to Citadel's manipulation to Melvin Capital's manipulation to how the Fed is in bed with Citadel, and Citadel is in bed with Melvin Capital and Vlad from Robinhood and the media. And they're all against you. And for the longest time, that was an unwinnable battle. And I'd like to think, yeah, and lack of SEC manipulation too. I'd like to think the internet, Reddit, even YouTube and Twitch and all just these social media platforms that have leveled the playing field where we can actually communicate on a grand scale and say, whoa, 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 hold on. We're not playing by your rules anymore. We see what's happening here and we're going to invest in it because this is what we feel like is happening instead of you telling us for the longest time and driving these companies into the ground, into bankruptcy, even though they don't deserve it. Now we can stand up for ourselves and say, actually, you're wrong and this is why. And it's still to be determined the outcome of all of this, if we will be successful, if GameStop truly will transform into something special. I think that's why this is such a historic event right now on the grand scheme of things. And it's truly something to behold. And I think that's why a lot of it is driven by FOMO. There's a lot of people, my family, family members I talk to outside of my brother that are getting into investing now, that are intrigued as to why this is happening with GameStop, what's happening, and people are starting to like perk up about the shenanigans going on behind the scenes that never were exposed before the situation happened. And as much as media just wants this to go away, they were like laughing about GameStop after it fell to $38 from its highs of almost $500 pre-market that first time. They were laughing at it. They were like, "Oh, that's what happens. You get hurt when you invest in this kind of stuff. That's why retail traders, we need to put rules and regulations to block." No, get the F out of here. No. People are allowed to do what they want legally with their money. And the problem is these companies are trying to like create rules and regulations to limit what you can do, to limit your ability to gain wealth, because they're scared that if you make your money, then there's going to be nobody out there to flip burgers anymore or drive the bus to school for the kids or anything like that. They need the average person to just remain in their remedial position forever while they continue to make money off of your back. And that's gone on since the dawn of civilization. And it's almost like this is a turning point now. You know what I mean? It's fascinating. It's fascinating. It's funny, too, because I invested in this thinking that it was a squeeze and pushed it to 500. And I was like, that's weird because GME, Short Squeeze, Rod Elsman, Roaring Kitty, me, we all got together in those chats. We talked to each other about this short squeeze, and we were like, if this short squeeze happens the way it's supposed to, based off of the naked shorting, the borrowing, the numbers, they just don't add up. It is an infinity squeeze. These hedge funds cannot escape it. They were betting on the bankruptcy of GameStop, and they were wrong. And when they were wrong, they doubled down. And when they were wrong again, they tripled down, quadrupled down, 5 times, 6 times. They just kept doubling, tripling, quadrupling over and over and over again. And it got them in this perpetual cycle of impossible to get out of it. So that is a whole nother variable. When people say, oh, what are the catalysts? That's something that I don't even consider anymore. That is still propping this stock price up alongside everything else, all the potentials. So there's a lot of good to come from this right now, but the media doesn't want to talk about that kind of stuff. They just want to talk about like the squeeze, how it's over, how people are losing money on this, how it's scary and super risky and making you fearful with your money. And look at how expensive it is. It's not worth that. It could go to zero tomorrow. I mean, theoretically, any stock could go to zero tomorrow. That doesn't mean anything. That doesn't mean anything. They didn't investigate the story. They didn't do their job. They're journalists. They're supposed to research this stuff and come up with reasons as to why the stock price is at what it's at, instead of just bashing people that were investing in it. We can see tarted longer than they can say solvent. Yeah, exactly. Oh man, I don't know. I have so many, if you can't tell, I have so many thoughts on this. Roaring Kitty posted his positions in Wall Street Bets again. Let me bring it up. I'm trying to think the best way to do this without crashing my computer. WallStreetBets.com. Oh wait, WallStreetBets.com. Reddit.com. We'll just go to Wall Street Bets from here. Thank you so much for the donation. Thank you all for the donations. Really appreciate it. Seriously. There we go. The first thing on my Reddit search. There it is. Gme Yolo update. Here we go. My boy, Roaring Kitty. $38 million. You know what's crazy too is, oh man, I could have retired a happy man if I invested more at $4 in this thing. I mean, don't get me wrong, I did all right for myself, but man, this could have been some life-changing money here. Serious life-changing money. Let me scroll down here. So there it is, and he's got calls. He's still got the calls. Oh my God, that's crazy. $38 million total value. Kramer, you fire. PM me so we can approve your account here on Discord. I know you're going to see this. The greatest ape of all. You know what's funny about DFV is, like I said, I knew Roaring Kitty back when the stock was at $4. Like, when nobody gave us the time of day. It was me, Roaring Kitty, Uber Kicks, which is Rod Alsman, Jen Cruz, Chris Roth, GME, Short Squeeze, and a few others. And that was it. And we'd go to his chats, his live streams. It was every other day for months. And it was just like 8 of us or 10 of us in there. And we're just chatting about GameStop for like 6 hours, 8 hours. And I mean, at the time, we all, speaking for myself, I felt like I was a loser that was going insane. I'm like, I believe so much in this company, and it's literally worthless. On the verge of bankruptcy. And I just kept putting my money into it. I'm like, it's got to turn around. It's got to turn around. You know, at some point, you start to question your own sanity with it. Do you think the squeeze is inevitable? I can't speak to that because this is weird how the squeeze is. It seems like it's, instead of like a squeeze is typically like a 1 day thing or a 1 week thing where it just shoots up and kind of comes back down to earth. This is just like elongated. You know what I mean? And it just feels like because of that, the pressure is always constantly pushing it higher, because they just don't want to get that squeeze over with because they can't afford it. Is what I think it is. Someone said that conference call didn't give you much confidence. I mean, what are you looking for? You know, I like I said, I would have liked to see some sort of acquisition announcement. I think a lot of people were kind of expecting something big like that. My exit strategy is, and always has been, to slowly sell as the stock climbs. I still hold a lot of shares. I don't want to disclose that here, but I still own a lot of shares. But I have also sold a good amount of shares, and I have played it very good overall. Of course, it could always be better, but you're never going to call the top and the bottom of a stock perfectly. And yes, I'm all about holding. I'm all about diamond hands. If I wasn't, I would have sold out completely. You know what I mean? But I'll get rid of that. I would have sold out completely, but I'm like, no, I'm going to be holding some of these shares forever. I'm never selling out completely. I will carry those shares to zero. For me, it's just a matter of I'm playing with house money on the shares that I'm still holding. And while it's still a lot of shares, it's unrealized gains, and it's something that I'm able to afford to lose. But I just don't bet what you can't afford to lose, because this is extremely volatile. But that goes for the entire stock market too. Just one thing I learned too, like I was selling a lot of my GameStop towards the top before Robinhood started all those shenanigans back during the first time, and I was trying to diversify it in the rest of the market. So I'm like, okay, I made some good money on GameStop. Let me put this everywhere else in the market. And GameStop came back and started doing well again, and the whole rest of the market just kept falling. And I'm like, I mean, you listen too much to mass media, and they'll tell you that you're supposed to just invest in the blue chips, invest in Apple and Facebook, which Facebook app barely even works for me. Invest in all these Google, all these big companies, and all these other companies, you know, just diversify for safety. And it's like the whole stock market freaking crashes and GameStop is still there, you know? So just be careful. And yeah, exactly. Ignore the noise. Do what you feel is right in your heart. Do your own due diligence. Don't listen to random YouTubers like me. Don't listen to Roaring Kitty. Don't listen to anybody. You know, take it all with a grain of salt. Do your own due diligence. Weigh the pros and cons. Hear people out, but hear the bull case and hear the bear case, and make a decision on what you're able to afford to lose, and roll the dice if you want to, because kind of what it feels with GameStop is it kind of feels like I'm at the craps table in Vegas sometimes. Not gonna lie, you never know what you're gonna get at the end of every day, at the end of the roll. But if you avoid listening to what people tell you to do, and just stick to your guns on what you truly believe in, then you too could become the next Roaring Kitty. You know, like what he did. There's a very fine line between genius and insanity, and for the longest time people looked at him like he was insane. I think he was even booted from Wall Street Bets, so he had to start his own deep fucking value thing, because he wasn't even able to post on Wall Street Bets initially because people thought he was crazy with GameStop. And I don't know that for sure. I believe that's what it was. Someone correct me if I'm wrong. But he was putting, what was it, $100,000 into GameStop when it was at $4, and it fell to $2, and he lost 50% of his holdings. Now, I made good money on GameStop, but $50,000, I don't care how rich you are, $50,000 will always be, forever, a shit ton of money. And he lost that almost immediately and didn't sell, and turned that $50,000 into over $40 million. I mean, that's obviously a unique specimen. That's not going to happen with every stock, but he stuck to his guns and what he believed in. Those streams that he did, those late night streams where it was just me and the guys. Well, I say me and the guys, and Jen. There was a girl there too. Where we're chilling. I saw his passion for this stock, and it was the only person I found online that could even surpass my own passion for it. Was him. And I'm like, there's something wrong with this guy. I'm like, I believe in GameStop, but holy crap, this guy really believes in GameStop. Look at DFE's cash in his account. He's going to execute his calls. Thoughts on this? I mean, that could help the stock. That could help the stock if he executes them. No problem, Robert. Thank you guys for coming, by the way. Thank you. I didn't even know if I was going to stream this, like do a video. I thought I might just end after the call, but there there were a lot of people in here, and I had a lot of thoughts to give, so it made sense just to keep talking. If you guys haven't yet, please hit that subscribe button, the bell for notifications, and the like button. I would truly appreciate it. And also, check out my backlog of GameStop videos. Trust me, I've done a lot of due diligence on this company, and I truly still believe in it. I only stream on YouTube. Yes. I have a Twitch account, but I don't have the time. I don't have the time to spread myself that thin. DFV never lost. He might have been exactly. It's just like a boxing match. You lose a round, but you never, you get up off the mat and you come back and you beat the crap out of the guy. Oh man. But yeah, crazy. What's transpired with GameStop right now. Am I on Reddit? I am, but I don't post on Reddit. I read everything on Reddit. Let me see if I am. Where am I? Why am I not? I'm not logged in, but I'm at. Am I logged in? I don't know. I don't want to show it publicly in case. So let me comment. What's it say? Yeah, see, I'm SmashJT. I am on Reddit as u/SmashJT. But I don't really post very often. I use it more just to read. Predictions for end of day tomorrow. God only knows. The problem is with a stock like this, it's so heavily manipulated that you grab your popcorn. Grab your popcorn. That's all I gotta say. I wouldn't be surprised to see it go to 300. I wouldn't be surprised to see it go to 100 or less. I really wouldn't at this point. It could do anything. Literally it could go to 1,000 tomorrow and I'd be like, yeah, I could see that. I could make a case for literally any number on GameStop. I think that's what frustrates the professionals so much with this is because they want something that's somewhat predictable where they know what to do with it. This is you have no idea what's happening. Between 100 and infinite. Exactly. I wouldn't be surprised if it fell below 100 tomorrow. That would really suck, but I wouldn't be surprised if it happened. Doesn't it cost lots of my manipulators? It does, but at the same time, it costs them a lot less to manipulate it down than it does to buy it at the premium of $300, $400, $500 per share. It's a cost equation that they've run, and they'd rather get slapped on the wrist by the SEC, if that even happens, and pay a $200 million fine, and save them multiple billions of dollars with a B of what they would have had to pay if they didn't do something illegal. That's the whole problem with all of this. It's almost like it behooves them to cheat and lie right now so that they can save money in the grand scheme and screw you, the retail trader. What was my opinion on the conference call from Matt Kors? Oh, did Matt Kors ask me that? I thought it was very anticlimactic. I guess that would be my TLDR on it. It wasn't bad. It wasn't great. It was just, this is where we're at. Don't ask us any questions. Full transformation still in effect and ongoing. Thanks for listening. Bye. That was the call. Zero the North. No, I don't think it would cost them more than during the squeeze. I think they literally have much smarter people than you and I running the numbers, and they have machines that have done all the research on this. They've researched all the short squeezes in the past and probably pieced it out to the penny as far as what it would cost them if they were to suck it up and pay what they need to pay which, by the way, it's an infinity squeeze. Once they call back the shares and realize the naked shorting, they can't really do that, which means the stock price could go to the moon. $10,000 a share, $100,000 a share. If people don't sell, that's not out of the question. That's what's so insane about this. Of course, you have to also remember, if the stock goes that high, it will also wreck the entire world economy. And world governments will not allow that to happen. As you already saw a precursor to that with Vlad stepping in and manipulating it on a very small scale with Robinhood, just to make sure the levels came back down, because it was starting to disrupt the values of all the blue chips, because these hedge funds needed to sell out of their positions of the blue chips to pay for their debts with GameStop, which was absolutely insane that GameStop was the center of everything. No, I don't think that they feel like paying off the short squeeze is a smarter idea. Because if that's the case, they would have done that already. They've run the numbers. They've realized that they can't afford to do that because it's an infinity squeeze. And if they start doing that, it will destroy the entire economy from the inside out. And it will expose even more manipulation once the world government starts stepping in. What would you guys say if Biden goes on camera and he says that the SEC is detecting a lot of shenanigans with GameStop stock, so we're just going to halt it altogether completely and no more trading GameStop? That is not out of the question. That's one of those, like, that's really scary to think that could be the future of something like this. Because they'd rather screw you, the investor, the retail trader, than screw the entire economy. So they see an option to prevent the squeeze. I don't know. I mean, if I knew that, I could make a better assessment on this. When are they going to sell? They're not going to sell the brick and mortar stores. They already said that they got rid of the non-profitable ones, but they're still keeping the ones that were profitable. And they made a lot of good moves when it came to that. I remember when they announced that they're going to start closing their non-profitable stores, people were making videos about how this is the end of GameStop. That's when I was investing in it. I even made videos. You can check my backlog saying people said that closing the stores is the end. It's the Blockbuster of gaming. And I said, no, they're closing the non-profitable stores. They're moving all the inventory to the profitable stores. That's a sound business decision when you're struggling. That's what you need to do. And they did it. So where do we go from here? Like I said, anywhere from under 100 to over 1,000, it's on the table. And I know that's not very helpful, but I'm not gonna stick my sword in the ground and say this is where it's going to be. I mean, who knows? I'm enjoying the ride. As Ryan Cohen posted that roller coaster tweet back when he took control, get ready for a roller coaster. There's going to be some serious peaks and valleys. Are they going to use the stores as like Amazon? Yes, Cries and Music. They already kind of started doing that, where you can order something online and pick it up in store same day. They've already started doing that, but I think the grand scheme, big picture plan is to do that to a much greater degree. Let's see, what is GameStop at right now? I need to. I'm surprised my computer didn't crash during all this. It was chugging really hard for a little bit there. Same day delivery, well, they already do same day delivery with DoorDash, but that costs money. So it would be nice if they were able to what we were talking about back in the Roaring Kitty streams, the OGs. If they created a club, like a GameStop club, like Amazon Prime, where you pay whatever. Amazon Prime's what, $130 a year? If you paid like $30 a year or $40 a year, whatever they set the price at, where you could get free same day delivery, or free shipping. And purchases would earn you credit towards future purchases. They already have the systems in place. They just need to kind of flip a switch and do it. So that's another catalyst. Somebody was asking about a catalyst, just doing something like that. No, I do not believe Melvin closed all their short positions. Absolutely not. Absolutely not. And the one reason why is because you guys who've done this for a while, invested in GameStop for a while, will know that day that CNBC talked to Melvin Capital and put them on before the market opened, when it was hitting $500 a share. They had Melvin Capital on pre-market, which they never do, just to say, we've closed all of our short positions. We have exited GameStop completely. And there's no way to verify that. It's just taking their word for it. And these guys are hedge funds. They're a bunch of manipulating liars. You don't believe a damn thing they say. And then for the rest of the day, CNBC was running in big yellow highlighted letters at the bottom of the screen. Melvin Capital goes on live Squawk on the Street to state they have exited all GME positions. And then it was pushed to my phone. It was promoted on Twitter. They promoted it on Twitter. CNBC promoted it. That's a little bit fishy. That right there should have told you to buy back in when it fell to $38, because why would CNBC be promoting a tweet saying that Melvin Capital has exited their short position? It was like funny to me how they're rubbing it in your face, how manipulative they were. No way they've covered the price. Exactly. That price would have, if they covered like they said they did. You have to remember, these guys don't like to be wrong, and when they're wrong, they double down. They don't. Oh, you got us. Let's exit our position. No, they double down because they're so sure that they're right, that they wanted to get all the money they could to squeeze everything out of GameStop. And then GameStop was like the kid in school that came back and beat up the bully of Melvin Capital and squeezed them. But no, they didn't. I firmly believe, personal opinion, all of this, by the way, personal opinions, obviously, I don't believe that they have exited their position completely. I don't think that's even possible. I really don't. Based off of how shorted this was and how much they were shorting it, just them, I find it very hard to believe that they just got out of it. I remember talking to my brother, because I was kind of new to the whole Citadel thing. I'm sure you guys were too. Nobody really knew who Citadel was until this GME thing exposed them for being basically the Illuminati of the financial world, where Citadel announced they were stepping in to loan, what was it, like $2 billion to Melvin Capital to bail them out. And I called my brother, because he used to work in finance, and I was like, who's the Citadel company bailing out Melvin Capital? And my brother goes, whoa. I was like, what? He goes, Citadel? I was like, yeah, are they big time? He goes, dude, Citadel is like, you don't F with Citadel. They are the man behind the curtain. And I was like, what's it mean? And he goes, if Citadel's getting involved, you should probably get out of GameStop, because they're gonna change the rules to make sure they don't lose. That's what they do. And I'm like, whoa. This is all before any of it, all the shit went down. And sure enough, 2 days later, after Citadel was bailing out Melvin Capital, it was announced that Vlad over at Robinhood was putting trade restrictions on GameStop. And then, oh, by the way, we find out that Citadel pays for order flow. They are the number one customer of Robinhood. Well, we're the customer, but they pay the money to Robinhood. So, I mean, it's just way too many coincidences. Way too many coincidences. And Citadel being involved with this whole situation, it goes to show just how serious this is. Citadel would not get involved if this was small time. This is big time. This is front page stock market, stock market news for the year. That's how big of a deal this is. And who would have thought? GameStop. Of everyone, GameStop. Insanity. Oh, man. Just dropped in from the Wall Street Bets link. CEO Sherman sounds like he's reading a hostage statement. Yeah, no, I would agree with that. Man, this whole you can't make this stuff up. You really can't. This whole situation. This is something like out of a Hollywood movie. That even a Hollywood movie would be kind of like, is that really believable? Thoughts on AMC? AMC was another one of my big positions. I actually exited 50% of my AMC position last week when it got to 1380. And it's funny because like the next day it went to like 1450 and I was kicking myself. And then it's just basically free fall since then. I look at AMC right now as I am strongly considering buying back in the 50% that I sold off last week because it fell so much. Like, I truly believe in AMC's comeback. I feel like that's the pinnacle reopening story right there. That's not getting any kind of attention from CNBC. They're making 9 moves out of this? What do you mean? AMC, well, I would be careful with that because AMC is strongly diluted compared to GME. The push with GME is because they haven't reissued new shares or had an offering. They actually bought shares back most recently. They did have a shelf offering available, but they never utilized it. So the float for GME is extremely limited. And the shorters out there, the hedge funds, were naked shorting because there wasn't enough float to short. So they were just inventing shorts and borrowing out of thin air, which got them in this position in the first place. Which is what gives me confidence to still be invested in GameStop right now. AMC, I'm not playing that as a squeeze play, although it could. I mean, anything could squeeze, but I'm playing that more of a reopening play. Like, I could see it getting to $15, $25 in the next year, maybe even sooner. Especially, ironically, I love how CNBC, again, totally fine with the airlines, Delta Airlines being valued at like $45 when nobody's on a plane, or Carnival Cruise Lines being valued at $28 when they haven't had a cruise run in over a year. But yet, GameStop is bad and AMC are bad. Why? Because they're shorted by the hedge funds that pay the bills of these companies. That's the only difference. Because if I were to look at AMC, I'd be like, I would rather invest my money in AMC as a reopening story than put it into an overvalued stock like an airline or a cruise line right now. I feel like those are the any kind of money you could earn out of those is kind of already built into the price. It's kind of priced at a premium right now. Whereas AMC is not so much. GameStop is, but GameStop also has a whole lot of things going for it. It's a very different story. The short squeeze, the Ryan Cohen, the new console generation, I mean, there's so many things, that the transformation to a technology company. It's wild. It's wild to try to even figure that one out. GameStop shares fall 12%. I missed what you said. Look what. Wait, what? Did CNBC really post that? I gotta find that. Hold on a second. You gotta be kidding me. I gotta check this. Dario, mi amigo. RKT, I don't know enough about. I dipped my toes into that after the initial squeeze and lost on it, and I'm like, I don't know enough about Rocket to do too much with that. Look at this. Look at that. You're right. It's right there. Oh my God. Wow. Look at this. This is great. Oh man. GameStop missed on the top and bottom lines with quarterly earnings, but e-commerce. Oh, I like how they don't lead with this. This is be what a bull would lead with is this. E-commerce sales jumped 175. 175% is a huge move. That's insanity. But they lead with missed on the top and bottom lines, which we all knew they were going to because part of the quarter was during a pandemic. Moron. The brick and mortar video game retailer named former Amazon Google executive Jenna. That's a good thing. GameStop also acknowledged in a filing it is considering selling additional equity shares. Okay, they acknowledged. What does that mean? What does that mean? During a much anticipated earnings conference call that at one point reached the maximum capacity, the company declined to answer questions. Oh. Tell me on this doll, where did they touch you? Oh my God. Investors are finally getting a look at GameStop's fundamentals. Here's what they did. This is crazy. Beep boop bop. Yeah, as our arcade would say. It released financial that missed Wall Street's estimates. Its latest executive shakeup, the company named former, yeah, we know that, and it hit. And this is such a weird bullet point. And in a hint of transformation that's got some investors excited about the stock, the company said global e-commerce sales jumped 175 and accounted for more than a third of its sales. That's crazy. That's great. See, this is what I want more information on. They acknowledged in a filing. That is such weird verbiage, acknowledged in a filing, that they could say, yeah, we still have the shelf offering and it's still there. That doesn't mean anything. During a much anticipated, okay, we already said that. Stock initially traded higher after the bell. No, it definitely doesn't follow the rules of traditional investing. You're right, Andres. Last down 12%, with traders likely reacting to the potential share sale, an action many investors and analysts thought would be prudent given the Reddit-fueled run-up of the stock. These guys are begging for shares. They're begging for dilution. That's the only get-out-of-jail-free card they got because they naked shorted it. They can't get out without GameStop creating shares. They cannot escape it. They are trying to push this narrative. They're begging for those shares to come out. Here's the problem. If GameStop does issue shares, depending on how many they issue, it could likely lead to a crash of the stock down if the short squeeze is what is propping the numbers up to where it is right now. There's also some likely disappointment about the lack of detail from the conference call without any questions answered. She's really bitter about that whole questions thing. I kind of get the questions thing because I followed GameStop for a long time and I saw how analysts would try to angle questions to make GameStop look bad. Even when they were doing things the right way, they would still make them look bad. So I get that. I don't think I've ever seen that happen before, but I get it in this situation. But I would say my disappointment is just right here. There is some disappointment about the lack of detail. I don't think they went into enough detail about their plans. But again, I go back to, I'm investing in the belief of what Ryan Cohen is going to do for this company. It would be like somebody investing in Tesla right now. And Tesla definitely not having the sales to prove the numbers that they have for their valuation. But Tesla gets a pass because Elon Musk. I believe in Elon Musk. Oh, okay. Then you can buy it. That's CNBC for you. Yeah, it's 100% leading the witness with the questions. The increase at the market program. Okay, here we go. Since January 2021, we have been evaluating whether to increase the size of the at-the-market program and whether to potentially sell shares of our Class A common stock during the course of 2021, primarily to fund the acceleration of our future transformation initiatives and general working capital needs. For the fiscal period, GameStop... Okay, so that's that. So this... as a shareholder, I do not look at that as a bad thing. Like, I'm like, yeah, I mean, get your money. Do something with it. Blow this thing up. Let's go. Let's create a whole new avenue of growth. Take advantage of this. Again, depending on how many shares they offer, and I would say what the research they've done on if that would completely just crush the stock price. Because if they make it's a win-win situation right now for them. Because say they crush the stock price down to $90 or 30 bucks, we'll say, which they couldn't possibly do. Because if they crush the stock price down with an offering down to $30, the money they'd get from that offering would value the company at way more than what it's at right now. So none of that makes any sense at all. Yeah, Palantir is kicking my ass. God. Palantir is at a discount right now. It is, but yeah, just be careful with Palantir. It should be higher, but very manipulated. Company said they declined to answer questions. They didn't. Yeah, exactly. They said we won't be. Exactly. They're trying their best. We already know. I do have BlackBerry, and I believe in BlackBerry. I like the direction of BlackBerry with cybersecurity, and I think there's a lot of potential for their future. But a lot of things, like GameStop, a lot of things have to go right and have to fall in place. BlackBerry is by no means a guarantee. That's a long shot, deep value stock, but I like BlackBerry a lot. And the lower BlackBerry goes right now, the more I like it. You know what I mean? Because I feel like fair market for BlackBerry should be like $15, but it's trading at what? Last I checked was like 9 or 10, and I like it at that price a lot. Man, they love to try to make it look bad. This is fascinating. Let's say what they say about Cohen. GameStop stock has traded positively on new developments for the company. Okay. GameStop also said if the bell continues to seek out. Okay, so they're looking to hire more people on the executive level for e-commerce. He's serving as chairman of a special committee for... I would also say, I think one of the disappointments I had was GameStop didn't formally announce that Ryan Cohen was going to be like CEO or stepping up to be chairman of the board of the GameStop board, or he's like chairman of a special committee from the board. I mean, I guess it's who cares? It's nomenclature at this point. We all know who's in charge there, but it would have been nice just to reassure the shareholders. How often did they say they declined? They didn't say it. They said it at the beginning of the call, I believe, but I was setting it up on the background, so I didn't really hear it. I wouldn't say looking at the chart tells you anything with GameStop. At this point, the chart literally tells you nothing. It really doesn't. Right now, it's a stock based off of hearsay and belief. What you're afraid of, weighed against what you believe the future of the company could be, and nothing more than that. That is literally what it is. It does not trade on fundamentals whatsoever because of the short squeeze pressure, in my opinion. But I wouldn't say a short squeeze is priced in. A short squeeze can't. That kind of goes against what a short squeeze is. I mean, here's the thing. People are saying the short squeeze is over. It's done. It's the same thing. I sound like a broken record, but like I used to go on stock twits a lot back when GameStop was at $4 and $8 and $12, and the whole time there'd be naysayers in there talking about how it's way overpriced, way overvalued. And then when Ryan Cohen joined the board, they were saying how GameStop is, verge of failure. He's just going to run this thing into the ground to get money out of it. Like anything you could think of in a negative light. And all the while, the stock just kept going up. And so while I do like to hear the bear case and understand, I don't want to just be, hearing the good things. I also want to understand the alternatives, what could go wrong with it. I weigh the pros and cons, and I'm like, to me, it's an easy decision to keep believing in it until it doesn't feel like that anymore. You just said invest for the future of the company, but then you said stock doesn't trade on fundamentals. Yeah, I did. Invested it for the future, and the stock doesn't trade on fundamentals. Those two things can be mutually exclusive things. I understand what you're saying, but thank you for the sub. Thank you for the sub. If you guys are enjoying the stream and you haven't already, please subscribe. Hit the bell for notifications. I'd appreciate it. Hit that like button too. Means a lot to me. Man, I'm starting to lose my voice. I wasn't expecting to do a live stream talking this long. Did he? Let me see what he said. Hold on. I'll bring up my Twitter. Thank you guys very much for the support. Appreciate it. Let me bring it up here. Man, my computer's going so slow right now. I can't believe it hasn't crashed yet. Okay. Crush them. I love it. It's so funny. It's so funny because me and him, I'm like, I look at him like we're boys. Like I love this guy. I never would have imagined our relationship, how it started, would turn into him being like a god of the internet. In my wildest dreams, I could have never imagined it. Oh, this is great. Yeah, he's tweeting a lot today. Oh, man. Months ago, you were just casually talking about GME. Yeah, exactly. I mean, that's what it was months ago. It's just casually. Zero the North, I've been trading about a decade. GameStop definitely picked up the pace of my trading and turned it into more of a full-time effort. But I've been trading on and off for over a decade now. And I'm not always right, by the way. I like to make sure people don't think that I'm like this cocky guy that's like, I know everything. God damn, if you hear anyone on the internet tell you that they're right about something, or they know something for sure, then run. I mean, I invested a good amount of money in THQ back in the day, and they went belly up, and I lost all of it. And I would almost say that that experience cost me a lot of money because it limited how much I wanted to put into GameStop, because I'm like, oh, I don't want another THQ situation where I lose all my money. But I put enough in to make it worth my while. I wish I had the conviction and finances that Warren Kitty did back at that time, but I mean, hey, hindsight's 2020, right? Smart enough to know what GME stock will do, but not smart enough to buy a computer to handle the chat. Well, this is not my rig. I have a major rig computer, but that is out in the family room of my house. And you guys would probably get annoyed with my kids running around screaming and yelling the whole time in the background. So I'd rather deal with this and just go with that. How much to become a 51% majority shareholder? A lot. Oh man. I know, right? If only we knew, you know, if only we knew. It's funny too, because for me in particular, like I was there at ground zero and I saw the opportunity and I put money into it. And I was like, okay, I made money on this. And then it just kept going up and kept going up and kept going up. And like I said, in my wildest dreams, no matter how much conviction and hope I had in GameStop, I could have never envisioned it doing what it did. Ever. And that is with knowing that there was a potential short squeeze, and knowing that there were potential catalysts with the next generation console cycle, and knowing that there could be angel investors like Ryan Cohen coming in to save the day. Like there were so many variables that were catalysts, and I still could not have envisioned this result. Not even close. Not even close. I think it's funny. Everyone was hoping for some insight on this earnings, and I think it disappointed them because it didn't really give any insight, and the roadmap they gave was very scattered almost. It wasn't detailed enough. Like I see what they're trying to say that they want to do, but they're being very careful about how they say it. Now that could be because they're scared to show their hand to the competitors, or it could be that they don't know what they're doing. And that's a little bit concerning if that's the case. But I'd like to, again, default back to I put my faith in Ryan Cohen. He's been there before. He knows what he's doing. He understands all this. And I believe that he knows what he's doing. So hopefully that's not the case. Jesus Ramirez, Sundial, I got out of. After doing some basic research on Sundial, I personally do not feel like that is a good investment. But you're also talking to a guy that was putting money into GameStop when it was borderline bankrupt and could have easily gone bankrupt if things went wrong during the pandemic. So who knows? Who knows? But yeah. Oh man, we still got a good crew in here. I feel bad. Like this is crazy. Crazy. Where is my... Oh, there it is. Trying to find my screen. How low will this drop tomorrow? How high will it go? That's what it is. Tell us the story of how you met DFV. Oh man. Well, I invested in GameStop back when it was at $4. And then I researched on YouTube because I was like, oh, it's a low stock price for a game company and a store that I shop at. It's down on its luck. Let me see if I can make some money out of this. I didn't really do much research on it. I was just kind of like throwing a flyer on it initially. And then after I put money into it, I made a YouTube video. I explained to people why I was doing it, because of, you know, the transformation that they were undergoing before the pandemic happened. And then I wanted some sort of confirmation bias. I wanted to hear people tell me that I was right, because everywhere on the internet you look, people would say that you were wrong. And I was like, well, I need to find people that say I'm right about this, because all I hear is the bear case, and I see potential for the company based off of my personal experiences with it. And and so I searched on YouTube. I was like, GameStop live stream or GME live stream, and Roaring Kitty showed up, and I clicked on it, and it was Roaring Kitty with his headband on, and it was like 6 people in the chat, or maybe it was like 8 people. It was under 10. It was literally like 6 or 8 people, and I was like, "Hey, what's up?" And then like, "Hey," I was like, "Fellow new GameStop investor here," and everyone was like, "Welcome, welcome." And I was like, "Oh, this is cool. This is like a crew of people that all invested in GameStop while they're down on their luck. Let's like chat about this and do some research." And fast forward a few months, and the chats were starting to get like 12 to 16 people in them. And then a few months later, they're getting like 30. And then on Christmas Day, when Roaring Kitty posted his video about how he's now a millionaire, which I had no idea he was a millionaire, because I had no idea how much money he put in, I was like, holy crap, dude, congrats. Because I felt like I was tight with him. I mean, it was me and 6 other people in a live stream chat for like 8 months leading up to that day. So I was like, dude, I'm so happy for you. I'm so proud of you. I made a video congratulating him. Like, that was really cool. And then the squeeze started in, what was it, January. And then he started getting a lot of eyeballs at him. And then his streams took off. Like, he was getting thousands, like 3,000, 4,000. And his latest one was like 12,000 people during his stream. It was crazy. I didn't ask him about Citadel being too big to lose, but I would imagine his response is yes. If I had to answer for him based off of how he talked about them. But yeah, that was how I met Roaring Kitty, and such like genuinely from the bottom of my heart, a really good dude. Like, he's not just playing that on screen now because he's popular. Like, he from day one has not changed who he is. The money, the popularity, his success has not gone to his head at all. Like, he still feels like the same guy that I chatted with him when it was just us and 7 people in the chat, as him now, where he's become like a national icon representing this GME story. But yeah, he's still not a cat. Oh, don't even get me started on that whole that ridiculous governmental investigation. What did that even accomplish? What a waste. What a waste of taxpayers' time and dollars. For what? Maxine Waters putting that all together just to get everyone to be able to say they participated in talking about it. GME open at the official market open. I'll say one. See, the problem is it wasn't able to hold the closing price after the call, which is a little bit concerning because it starts to weigh on people's emotions, because trading is like 99% emotional. It has very little to do with the actual fundamentals at times like this. I wouldn't be surprised to see it open at like 145 or 150 and then go up from there. I wouldn't be surprised to see that happen. There might be in the pre-market like a hard bounce at 140, 135, 145. But I mean, this is all speculation. I don't do price targets. Because nobody knows. Nobody knows. I'm just kind of trying to guess the mentality of the market with the feel that I have for GameStop and how it's traded in the past. And that's kind of my feel of what would happen. How many shares do you have? I don't have a ton of shares, but I have enough to feel comfortable that if it went to zero, while it would suck, I would still be financially okay. But I definitely don't want it to go to zero. That jump yesterday after hours at 372 was crazy. That might have just been like one trade or something. I didn't see that. But don't put too much faith into that kind of stuff. You want me to talk more about it? I didn't see it. I just saw what it closed at and then what it closed post-market at. I didn't see the spike in after hours. Are GME now able to speak freely? I don't know what you mean by that. Like, am I able to talk about it? I can share my opinions on it. He tweeted again. Man, he's a tweeting machine today. A comparison between Volkswagen Squeeze and GME, please. I mean, Volkswagen was a one-day thing where it went from like 100 to 1,000 back to 100 the next day. So it's, I feel like hedge funds learned their lessons where they're stretching the squeeze out now instead of letting that happen this time. But who knows? Who knows? Yeah, that's it's funny how in sync me and him are with it, because we literally started investing with this at around the same time, within a few weeks of each other. So I've had the entire range of emotions, albeit definitely not to his extent with the money that he's had behind it the entire time. Hey, level 1, the camera takes off 10 or 12 pounds. Did I say a day? I meant a week. Sorry. Yeah, but it was a week. That's what I mean. Like it spiked in over a week. Are you obsessed with DFV or something? No, I was answering questions people were asking me about him, and he's a friend of mine. What would you like me to talk about something else? What would you like to talk about? Why are some people so aggressive in chats? It's so weird. Like, we're all here. We're all friends, guys. We don't have to be dicks to each other, you know? Will GME reach 200? Definitely, maybe. And who isn't obsessed with DFE? Exactly. I believe this is past Volkswagen now. We are in uncharted. No, exactly. There's no comparison between Volkswagen and this. I did some quick research on Volkswagen squeeze back when the first squeeze in GameStop was happening, and apparently it was like heavily manipulated by Porsche. Like it was basically, they created the squeeze purposefully, and it worked. This is a completely different ballgame. Like, that was one that, I guess if you want to say Reddit is trying to manipulate and create a squeeze, I guess you could. It's different. It's different, but it's yeah, apples to oranges. I mean, they're both fruit, so they're both squeezes, but they're totally different fruits, you know. It's the internet. People are mean. I don't know who hurt them. It's funny. Like, I make a lot of YouTube videos, and I'll always get like that one random comment in every video from a completely different person that's just like a straight up asshole that just has it out for me, and I'm just like, what? Why are you mad at everything? Like, this is a video I put my time into. I edited it. I posted it. I published it, and it's here for you to watch if you want to. You don't have to get mad at me. You know, people are emotional though. I get it. I used to be like that too, so I can't hate on them too much. I like the stunk. What's an exit strategy? Yeah, that was the best. Whoever posted that picture of DFV and black and white, and underneath it just says, "What's an exit strategy?" Level 1. Why are you mad, bro? What do I think of AMC? Eddie, you must have missed what I just said about AMC about 20 minutes ago. I like AMC. I I don't love AMC. I like AMC. The more AMC falls, the more I like it because they're not going bankrupt and they're not going anywhere. So I definitely like it. I definitely still have shares in it. But I did sell off half of my position last week when it got to 1380, I think is when I sold it, the 1350. Do you think Roaring Kitty stopped streaming for legal reasons? Yes, I do. Yes, I do. I think he definitely hired a lawyer, and I think his lawyer definitely told him to stop streaming. Plus, the other thing, on a personal note, when it comes to YouTube, and those of you in the chat can probably relate to this a lot better than those of you that are in the chat that are not YouTubers. Streaming and making videos, making any kind of content, it's work. It takes time. It takes effort. It takes patience. It takes research, and the payoff needs to be there, whether that payoff is financial or a creative outlet or whatever your payoff is on why you do it. Whether you want to be popular, whatever it is, I don't care. There's different reasons for everyone. And a part of me thinks that Roaring Kitty never really asked to be famous and never really wanted to be that popular, and he got it and it came to him, and I think he was just doing it for the passion of the streams. And now that it happened, I mean, what we used to stream, there was so much to talk about every day, like the crazy stuff that was happening on a day-to-day basis with GameStop. Now, even though the stock price is super high, it seems like the news has slowed way down. So there's not that much to stream about right now when it comes to GameStop as well. But in addition to that, especially after the government intervened with it, and especially after it came out that he was actually a financial advisor at one point and didn't disclose that, I'm sure that there was a lawyer that told him, dude, only bad things can come from you streaming. You got your money, you got your fame. Why are you going to stream? All they're going to do is want your head on a stick. That's what humans do, unfortunately. And in this case, it's the rich people want his head on a stick. Usually it's the poor people want your head on a stick. In this case, the rich people want his head on a stick. You stream daily? No, I do not. I stream when there's something to talk about. I make a video when there's something to talk about. I have a full-time job. I have a family. I have a life. I have a passion to do this still. I don't have the time that I would like to be able to dedicate to this to make it work. So I stream when there's something to talk about, and I'll make videos if I have something constructive to add to a conversation. So hit the bell, because I promise with my uploads that I won't waste your time too much, hopefully. Have a go at the GME SEC 10K from today. They talk about the squeeze. Oh, I'll have to check that out. If you ever have the time, you should stream more. I eventually, Zero, in the future, when things slow down in my external curricular life, I do plan on that. Did your donation come through? It probably did. I turned off the donations because it was like I didn't know how to mute it, so I just deleted it, the notification. But thank you for the donation. Let me see if I can find how to put that back. Oh, thank you so much, Bobby. That means a lot to me. That really does. And that's the thing. Like, that's how I found out about Roaring Kitty back when he had. I literally subscribed to him when he had under 80 subscribers. Like, I was one of the first subscribers to him. And the only reason I found him is because I invested in GME and then searched him out on YouTube, and I loved what he was bringing to the table with his research. So I subscribed to him. And that's how you grow as a YouTuber, is you create content that people are interested in, that you're also interested in, and they'll find you. Like, that as basic as that sounds, a lot of people miss that obvious fact. Thanks for the stream. Subscribe. Look forward to watching. Thank you guys so much. Seriously. Today has been wild. Like, when I do stream, I typically get like 50 people in the streams, somewhere around there. So it was wild today when I saw I had like 22,000 people. I was like, GME is something people really care about right now, for sure. And that, like I said, that's something I could have never imagined back when I first started investing in this. One thing too, by the way, get used to seeing this face, because I may, nothing's been signed yet, but I may be, I was contacted by somebody to potentially be in the GameStop documentary that they're going to be filming. So pretty excited about that. So you guys might be seeing me around more than you expected. I landed up here because the call was at max capacity and out of a subscriber. You know what's funny about that? I've obviously been invested in GameStop for a long time. And I found out during the last conference call when I tried to log into it that it was full. And I'm like, that never happens with conference calls. They get full. So this time I logged in. This stream's been going for almost 5 hours now, 4.5 hours. I started so early. Roaring Kitty viewer number 3 on the left. I don't know what you mean. But I started this so early because I'm like, it's definitely going to fill up this time if it filled up last time. So that's why I streamed it, because I'm like, I'm going to stream it. I'm going to stream it early because I know there's going to be a shit ton of people that can't get to the stream, and I want to help them get that. So I'm glad you guys found me. I was glad I was able to help you. No, it's going to be a good documentary. It's gonna, from what I understand, it's gonna focus on the Roaring Kitty crew, the people that were the early investors, the Reddit crew, the Reddit crowd, the early investors at GameStop, and how they clung together throughout all the hate and the negativity and the fear mongering, and how they stuck through it all and saw it out to the end. If this is even the end. Who even knows what the end is with this? Awesome. Yeah, I had one of my buddies text me. He's like, dude, you got a lot of subscribers today. I was like, oh, wow, that's cool. I wasn't expecting that, but I'm definitely appreciative of it. It means a lot. I've never been so entertained while losing money. I'm sorry about the losing money part, but glad to entertaining. How many fake shares are out there? A lot is the official answer. I can't say anything more about the documentary because I haven't read any of the fine print. I don't know what I'm allowed to say. I don't even know if I'm allowed to tell you guys that. But it's pretty exciting. It's pretty cool. It's something I'm looking forward to. You should do a live Reddit GME thread comment broadcast sometime. Yeah. Maybe. Like I said, I wish I had more time. Discovery? I didn't hear about that one. You look at the GME thread on Gamma Squeeze tomorrow. Curious to hear your opinion. I will check it out. Give me 1 second here. I still can't get over this. Oh god, that's ludicrous. How long could this? I mean, this could go on forever. It's an infinity squeeze. That's what's got everybody so interested in the situation. Oh man, you gotta laugh at the negativity too. It's funny. Let's go to Wall Street Bets. I mean, unless GameStop issues shares, it could go on forever because there are more shares shorted than shares that exist. So they'll always be raising the price to buy them back. That's the conundrum that they're in right now. Let's see. Where's the gamma squeeze thing? I don't see anything on it. 26 days ago. That's the latest one. Let's do past the hour. Nothing. Oh, okay. I'm in the wrong place. Gme. Yeah, we were talking about that. Are we still holding? Crazy. Love it. Wait, what is this? Wait, what? I mean, that's cool, but it's also an extra step. Like, why wouldn't you just buy it directly from Steam? You play an Origin. Why would you? I mean, unless you have like a gift card or something, or unless there are points you can accrue with your GameStop credit card or something like that. I mean, it's nice to have the option. I don't know if this is game changing like this title is. It's nice. It's nice to have the option. Um, it's not they're starting their own Steam. It lets you buy the codes and use them. No, it's not a Valve partnership. No. Don't blow this out of proportion. I don't look at that as a huge deal. It's nice to have the option, but it's literally just you buy the game and it goes to Steam or to wherever. X Amazon, X Google. I'd say that that's someone who's pretty big time. This is the other thing you gotta look at. Like, a down and out company does not get X Amazon, X Google, X McKinsey COOs. They don't want to work for dying companies. So that's how you know something big is happening here, that these big names are joining, that this is going to be something special. It's at the top. This one? Wait. This is 1 month ago. That's not it. Oh, possible gamma squeeze. There we go. Duh. Sorry, me ape. Me not read so well. Good. Me not read so good. There we go. Don't want to English. I don't want to English right. Okay, so it's talking to gamma squeeze based off of the contracts and call options. This, I didn't believe in gamma squeezes before the first one happened. After it happened, I was like, oh man, gamma squeezes are real. So now I'm like, okay, I'm open to these ideas now. That's not bad. Honestly, after that conference call, that's not bad at all. And I don't think it goes down tomorrow. I really don't. I really don't. And I think that's going to drive CNBC insane when it goes up tomorrow. I really do. You got the second comment on that thread? Are you under a different name? Yeah, Spyro, we did. We talked about that earlier. It's pretty cool. He tweeted again. I am a little bit surprised he never followed me back. He is very particular about who he follows. Only 98 people. I love it. CNBC is doing everything in their power to knock GameStop down. They really are. But I think we're learning it's an exercise in futility. Second wave of stimulus deposits coming tomorrow. Oh man, I don't know. The stimulus is such a wild card. This is crazy. Someone definitely wants it to tip 400. Now, do remember this was before the call 5 hours ago. But I think this, I strongly feel like there's going to be another new tweet. I strongly feel like there's going to be a run in GameStop and AMC and BlackBerry and Sundial, even though I don't believe in Sundial as a good company. I think those are going to have another push. I really do. I feel like they've all fallen way lower than fair value. I feel like Sundial is above fair value, but it kind of just joins that list for whatever reason. I mean, you can be short. I'm not mad at people being short. Short all you want. That's why I say in my videos, like, I don't know what's going to happen. And I think it's hysterical that people get mad at me when they say I'm a pumper. And I'm like, I'm not. I'm just telling you my due diligence and how I feel about it. You do whatever the hell you want. Like, short it. If you think that I'm wrong, put your money where your mouth is and short it. Let's see how that works out. I'm not mad. I mean, that's the game. There are winners and losers, you know? That's how this works. I do believe in AMC. Especially long term. Especially long term. I don't know about the immediate short term. I think it's going to be extreme volatility over the next month, maybe two. But long term AMC, I think it's headed back to $40, $50, $60 in a year. I wouldn't be surprised. Especially once Hollywood movies start coming out. Like, I listened to the AMC conference call. They named so many awesome movies that I'm definitely going to go see in the theaters. Top Gun 2 comes out on July 4th weekend. Yeah, I'll be there. A new Marvel movie. A new Disney movie. I guess they're both Disney. A new... I can't think of any of them off the top of my head right now. But there were like so many movies that they're naming. I'm like, yep, I'm going to go see that. Yep, I'm going to go see that. And yeah, there'll be a movie theater renaissance soon. I agree, 100%. When people get the vaccine, they're gonna want to go do stuff and live their life and go into the movies. I can't tell. I have an 82-inch TV and an amazing home theater system, and I still want to go to the movies, even though I have literally all the technology in my house. Because for me, it's an escape from the kids. It's a date night for me and my wife. It's something to do outside of the house. I am all about the movies. Black Widow. There we go. Yeah, yeah. That's what I was thinking of. But there's so many movies that I can't wait to see. AMC, I don't believe has too much debt. I don't. I think it's like I said. I think it's going to be a bumpy road to get there, but I think eventually they'll be good. I mean, the price action is definitely artificial. It's not normal for a stock to go from $2 to $4 to 8 to 6 to 25 to 6 to 5 to 15 now to 11. It's all over the map. I don't like Nokia. I did some research on Nokia. I initially invested in it and then I took my money out of it after I researched it. I don't like the management of Nokia at all. I don't like the technology. I don't really think it's a good 5G play. I don't like anything about Nokia. Now I could be completely wrong, and they could turn it around. They could hire better leadership. A lot could transpire, but I look at Nokia as there's potential there, but I'd rather put my money elsewhere. That's the way I look at Nokia. It's not like a terrible investment. There's potential for a turnaround. Yeah, that would be something. Tesla announcing that. SOS, I'm not well versed enough to speak on SOS. I hear good things, but I didn't do the research on it to be able to speak on it. My go-to source for research. Honestly, it's more of a vibe that I get it being in the industry. Like, I've worked in the game industry on and off for almost half a decade, and I do a YouTube channel that focuses a lot on video games, and I play a lot of video games, and I live my life in that world, so I feel like I understand the GameStop story better than the average investor does because I'm living in that world. And that's why I think it's hysterical when CNBC talking heads try to talk about GameStop like they know anything about the gaming industry. They know nothing about the gaming industry. Yeah, that CEO bonus thing was a really bad look. Was it like doubled it during the pandemic? I was like, eesh. That's a bad look. That's a bad look. I do stream games, typically retro games, but once in a while, new games. I'd say I stream on average probably once a month, maybe twice a month, depending. Sometimes more than that. Sometimes 3 times in a week. I mean, it's totally when I have the time. Jamie, I do shop at GameStop. I have been and I still do. Even that was one of the leading reasons of why I invested in it. I'm like, I buy stuff from there. And I feel like while the customer service is lacking, I feel like that's an area of opportunity that they could improve on, and that's exactly what they're doing right now. Eddie, I used to work at Blockbuster. That was one of the first jobs I ever had. I loved it, by the way. One of my favorite jobs ever. And yeah, I never thought Blockbuster was going to go bankrupt. Ever. I mean, from working there and then seeing the transformation to Netflix and seeing the entire road ahead of Blockbuster, the leadership there just made wrong decision after wrong decision after wrong decision because they got greedy. They wanted to stick with what was making them money. They did what Kodak did. They wanted to stick with what was making them money instead of doing something to ensure future success. They were very short-term thinking instead of long-term thinking, which now GameStop used to be very short-term thinking, and now it's transitioning into very long-term thinking. And people were concerned the transition was too late, but financially, it's working out for them, and they're not too late right now. They can still do it. That is my TLDR of GME, what I just said. Speaking of game industry, I bought CDPR after their reputation stock tanks release. It's time to believe made bank. Bad company, though. That whole Cyberpunk situation. I get what you're saying. I just I don't think the stock fell enough for what they did and how dirty their actions were with Cyberpunk. And I just one, they're not traded in America. It's like Sweden or something, right? And two, I don't want to give money to a company that does stuff like that. That would be like me investing in EA. Like, no, I'm never going to invest in EA. I think they're a horrible company. It's basically like the Philip Morris of video game industry with microtransactions. They're terrible. But they make money, so the investors love them. But I would never support that. I'd rather support other businesses going about it the right way. Is it possible that the timing of the hedge funds trying to tank the stock market? Yeah, of course that's possible. I agree. uh, I would never tell someone to buy at any price. Because first off, I don't want to be held liable for that. I would feel horrible if I was like, yeah, dude, it's totally a good buy at this price, and you buy it and it goes to $90 tomorrow. I'd feel horrible. And I have no way of knowing if that's going to happen. So investment decisions have to be 100% coming from within and how you feel about it. And try not to get caught up in the FOMO and just riding the wave of what other people do. But if you truly believe in it for your own reasons, then hell yeah, go for it. Take-Two is an interesting specimen. I always feel like they're way overvalued for what amounts to literally one game, because I don't count Red Dead, I don't count the other stuff that they're doing, because it's literally just Grand Theft Auto. But Grand Theft Auto makes them... Hold on. GTA makes Take-Two per day. I think it was like $1 million a day or something insane. I can't remember the stat, but it was something like $1 million or $10 million a day or something crazy. It was something crazy, just from in-game microtransactions and purchases. $1 million a day. Jamie, I don't look too deep into that on the may sell shares thing. That's one of those shit or get off the pot things. Like, if you're gonna do it, they're gonna do it. If they're not, they're not. I don't get scared by them saying we might do that. Okay. Because I'd also say if they do it, that's not necessarily a complete negative, because that's going to bring in a crap ton of money to the company. And Ryan Cohen said in his letter to the board of directors before he took over that he wanted to ensure shareholder value. So the last thing he ever wants to do is come in there and tank the stock price. If anything, he would do it because he knows that would give shareholders long-term value, ensuring future success of the company because of all the money they'd be making from the sale. I mean, GTA 5 is, or at least was, free to play in the Epic Game Store. You could download it for free for like a 2-week period, like over last summer, I think. That's when I got it for free on my PC. Yeah, Denny, it's a far cry from what GameStop used to look at the shareholders, where they used to treat the shareholders as an ATM to take money out of them. Now Ryan Cohen is looking at shareholders like they are the owners of this company, and we value you. Like, wow, what a thought! Who would have thought a company would think like that? But yeah, I don't know about Take-Two because I feel like it's super valued for what they get, and who knows what the future is. Like when they announce a Grand Theft Auto 6, I know it's crazy to say, but there's no guarantee Grand Theft Auto 6 will ever be as reach the heights of Grand Theft Auto 5. Or what happens if Grand Theft Auto 6 doesn't have the attachment rate that Grand Theft Auto 5 did? I mean, it will, but what happens if it doesn't? You know, like there's a lot of variables that are concerning. But it's just hard. It's hard to pay that much for a stock that's literally just one game. That's the way I look at Roblox too. Oh, they're super capable developers. They are. But I mean, so is it CD Projekt Red. And look what they did with Cyberpunk. And how you doing, Prince of Fallen? Good to see you, man. Oh, he tweeted again? Or is this the one you're talking about? Oh, no, he did tweet again. I think he's going insane right now. I don't know. It's hard to tell. DFV is deep. Oh, what's this? Tweet me. I thought you meant DFV. Goose Fraba. I think it just means he's just like, yep, that's what's happening. Are people getting margin called? What's GameStop at right now? Yeah, it's 158. Do I need to refresh this probably? Yeah, he's definitely drunk. I mean, he'd get pretty tipsy towards the end of some of his streams after 3 beers. And they were IPAs, so I don't blame him. I know game developers are just studios. I mean, look what happened with Rare after Nintendo sold Rare to Microsoft. Rare was basically a shell of itself. It was just Rare in name only. I think this is all calm before the storm as well. But I mean, who even knows? This feels like a real life movie at this point. $70 million total shares is like a startup volume. They can split them down the road. I don't think it's a real share market. Yeah, that's true. Oh man. Ooh-wee. I didn't expect the stream to go so long. To calm the children down. That makes sense then. That makes sense. He's saying, calm down, children. No, they did. They definitely did. That's my point. Like, Take-Two theoretically could drop the ball with Grand Theft Auto 6 if they get too greedy, or if the upgrades require microtransactions. Not that they'd ever do crazy stuff like that, but there's so many things that they could do wrong by accident, or say that there's a weird social issue that they cover in the game, that all the what do you call it? Social justice warriors all get bent out of shape on, and then it gets mainstream media, and then they try to cancel the game again, which typically ends up making the game more money anyways, but still, I mean, there's so many variables. Just stay with us, man. I'm like so thirsty. Maybe I'll just chew gum. I got gum. I don't have a life. It kind of, in a weird way, feels like this is heresy to say, but I'm taking the reins from Roaring Kitty and doing his live stream talking about GameStop for him. I just need a headband and a cigar and a beer. There is never an exit strategy to my streams. That's the problem. Oh, man. Fine. Oh, Jake, that I did hear that before, and that makes plenty of sense. Although Citadel is invested in basically everything. They're like BlackRock. That's like the same thing. They have money everywhere. Yeah, and a cat shirt. Yeah. Yes, Jeff, indefinitely. Yeah, yeah, I saw that meme about GTA 5 spanning 3 generations of consoles. Well, I'd say GTA 5 was kind of. I got it on release day, and I enjoyed it. Um, but it did get a lot better with the improvements. But I played Cyberpunk on release day, and it was garbage. I'm like, this is garbage. I don't. There was no. The tutorial was overly complex. It felt meaningless and confusing. I didn't know what the point of the game was. Graphical glitch. I'm not even talking about the glitches. But then you get to the graphical glitches, then you get to the storyline glitches, and then you get locked in the game, and there's so many issues with it. Work phone. No, I did hear about that. I was like, geez, you guys are like 2 decades. The 90s called. They want your lawyers. What's up, Down Phoenix? Yeah, man. I was gonna stop the stream a while ago, but we got a lot of people in here, so I'm like, I'll just chill and chat. Ghost of Tsushima. What about it? I mean, I loved it. I got it release day, and it was my. Oh God. Last of Us Part 2 was probably I know that's controversial because there's people that just can't stand it, but it was probably my favorite game from last year on the PlayStation 4. And then Ghost of Tsushima and then Final Fantasy 7 Remake. But man, it's those are really tight. Like all three of those were so good. So good. Yeah, Cyberpunk was not even close to being ready. They needed to recoup some of their money, and they pushed it out just thinking that they could ride the hype wave into fixing it, and it ended up being a Anthem situation. Yeah, I mean, in a weird way, Jordan, the earnings today, I was kind of like laughing when I woke up this morning because I'm like, it's meaningless. The earnings have literally nothing to do with anything. Ironically, in this case, it's more of the what is the roadmap? What is Ryan Cohen going to do with this company? And my hope was that that's what they would talk about in the meeting today, which I guess if you bend enough, you could say they touched on it and they gave some bullet points. But I'm like, I would have liked more. I would have liked more. Yeah, Prince of Fallen, like I said, like Ghost of Tsushima and Last of Us 2, it depends on the day. Like, I went back and forth on that so many times when I was thinking about it. There was both of them. It was like a 1 and a 1A. Like, they were both just so good. Yeah, Denny, but at the same time, I don't think they were worried about the stock price with that game. They're probably worried about development costs. And having the stock high doesn't pay development costs unless they start using the stock to pay their employees. And that could be a scary, slippery slope. Please read the RGME SEC filing, okay? To the extent aggregate short exposure exceeds the number of shares of our... So they're literally going to create the shares that don't exist to get the shorts out of their position? That seems weird. Whoa, 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 what's going on here? This is big. This is huge. Yeah. Whoa. Whoa, whoa, whoa. That other stuff I was looking at, that was like whatever. This is Whoa. I'm trying to wrap my head around this language. This is crazy. This might cause the squeeze tomorrow morning. This might start the squeeze right now. When did this? 1 hour ago? And it's still down? This is crazy. I gotta see this. Hold on. Okay, let's do this. This is great. Here we go. Risk related to our common stock. The market price of our Class A common stock has been extremely volatile and may continue to be volatile due to numerous circumstances beyond our control. Fluctuated and may continue to fluctuate widely due to many factors, some of which may be beyond our control. This is them telling the SEC, look, don't come at us. This is the hedgies that are screwing with everything. Short squeezes, comments by securities analysts or other third party. Yeah, this is the hit pieces that they keep paying to put out against them. I can't believe they said that. That's great. DFV tweeted again. He's tweeting every 10 minutes. What does that mean? Does that mean that the earnings call didn't mean anything? You forget it? That's the way I take it. Actual or anticipated fluctuations in our financial operating results, risk uncertainties, COVID, new console launches, timing of new openings, shifts in timings. But do you notice what they start? This is an order of importance and likelihood of causing a fluctuation. order of importance is short squeeze. The first thing that they list. Oh, Sharon, that could be it too. And Marcel, yeah. Negative public perception of us, our competitors, or industry. Here we go. Short squeeze due to a sudden increase in demand for our shares that largely exceeds supply has led to extreme price volatility. I can't believe they acknowledge this. This is great. Investors may purchase shares, Class A, to hedge existing exposure or speculate on the price. To the extent aggregate short exposure exceeds the number of shares, Class A purchase. Yeah, Vera, I'm trying to find what it says in plain English here. I'm just reading it through it real quick here. Right here. This is the key. Those repurchases may in turn dramatically increase the price of shares of a Class A common stock until additional shares of a Class A common stock are available for trading. Once investors purchase the shares of our Class A common stock necessary to cover their short positions, the price of our Class A common stock may rapidly decline. Stockholders that purchase shares of our Class A during a short squeeze may lose a significant portion of their investment. A large number of shares of our Class A common stock available for future sale could adversely affect the market price and may be dilutive to current stockholders. So they acknowledge that they don't want to screw people. Thank you for the donation, Jamal. Can you read the paragraph above the bolded sentence? Which bolded sentence? Up here? Stock markets in general, and our stock price in particular, have recently experienced extreme price and volume fluctuations that have often been unrelated or disproportionate to the operating performance of those companies and our company. For example, January 28th, experienced intraday high of 483 and a low of 112 per share. In addition, January 11th to March 17th, closing price was as low as $19.94 and as high as $3.47. And daily trading ranged approximately 7 million to 197 million shares traded. Wow. During this time, we've not experienced any material changes in our financial condition or results of operation that would explain such volatility. This is them saying, don't come at us. We're not doing anything. And may continue to be traded by short sellers, which has put and may continue to put pressure on the supply and demand of our Class A common stock, further influencing volatility in its market price. Additionally, these and other external factors have caused and may continue to cause market price and demand to fluctuate substantially, which may limit or prevent our stockholders from readily selling their shares of our common stock. and may otherwise negatively affect the liquidity. That's a shout out to the Diamond Hands Ape Hold Strong right there. They're basically saying, no one's selling this, so our liquidity is not happening. That is awesome. I love that they acknowledge that. Read the sentence, we have received. We have received and may continue to receive a high degree of media coverage that is published or otherwise disseminated by third parties, include blogs, message boards, social, and other media, include coverage that is not attributable to statements made by our office associates. Information by third parties may not be reliable or accurate and could materially impact the trading price. Yeah, that's basically saying that there are hit pieces coming out that don't have any basis or grounds for their creation. But at the same time, just to play devil's advocate, there's a fine line between stating your opinion on something and why you feel a way and saying you're not allowed to talk bad about a stock. So the hit pieces, I'm actually okay with if it's just someone's opinion giving their rationale why they feel the way they do about a stock. The same way an optimist can look at GameStop saying, I like the stock, I'm going to buy it. Okay. Can't say no to that. If there's an article saying, I don't like GameStop, don't buy it, be like, okay, you can say what you want. It's a free country. You can say what you want. A 643 million order to be seen? What? Up or down? Thought this was America. I think it's crazy because this is GameStop basically acknowledging they're getting ahead of it. They don't want to be in trouble with the SEC. So they're doing the right thing. They're saying, look, this is the situation we're facing. We got nothing to do with this. So don't come at us when this all crashes down. It's not our fault. Said there was a new tweet, but it was not. The report basically states GME wants hedge funds to back off in the most common, polite manner. That GME knows these hedge fund shorts are being squeezed and knows to back the funds off. I mean, how do you tell a hedge fund to stop shorting something when they're confident it's not? It's at an inflated price right now. It's like a catch-22. Because you tell people to stop shorting because that's going to keep the price going up. But if they stop shorting, the price will naturally fall and they miss out on the money they could have made while they were shorting it. A large number of shares of our Class A common stock available for future sale could adversely affect the market price. That basically is them saying that they're not going to do a large offering to help the shorts out. How the hell did CNBC translate what this says into GameStop acknowledges that they might do an offering? This is them saying that it could hurt the price of their stock if they do it. So yes, they acknowledge they could do one, and they also acknowledge if they did it, it would adversely affect the stock price, so they probably wouldn't do it. Where can you find this? I'll post it in the chat. This is the document that I'm looking at right now, the SEC document. Future sales of a substantial amount of our Class A common stock in the public market by our insiders, or the perception that these sales may occur, may cause the market. They're saying if there's even an article from CNBC that says, hey, we might do a share offering, that will negatively affect our Class A common stock price. And what did CNBC do? Literally just now, right after this, posted an article saying that they're considering, or they acknowledge that they may do a stock offering. Yeah, they can't do it. They can't. Those are some big shoes to fill, Rigo. I don't think I could ever say that, but thank you. Yeah, right, Jack Spide? I'm sure. He tweeted again? Jamal, that would be classic. They sue him for the after-hour drop. No, I already got that one. Ah, Denny5, you're right. You're right. They're in a very precarious position where they have to watch literally every single letter of every word that they say and make sure that the punctuation is correct. And they probably had lawyers read over it 20 times over before they actually went public with the conference call. That all is bullish to me. Am I going crazy? I'm like, this is all good news. Future sales, yeah, I already read this. Future sales, the amount of a Class A in public market buyer insiders, or the perception. This is the biggest one. That these sales may occur, may cause the market price for Class A stock to decline. Here we go. 2 hours ago. Oh, Maggie, you look really dumb right now. When was this posted? 1 hour ago. When was this posted? Isn't there a date on these? The hell's the date? Guys, I'm not gonna lie, like everything I'm reading is like extremely bullish right now for it. Maybe I just have my what do you call it? Positivity goggles on. Report came out at 5 p.m. Okay, so this came out at 5 p.m. And this came out at 4:39 p.m. Oh my God, they just dropped the hammer on this girl here. I love it. They literally preemptively called exactly what CNBC was going to do. As company says it may sell stock. But they don't say that. Rose-colored glasses, thank you. They talk about the possibility on page 3. Okay, let me see that. We utilize cash generated from operations, cash on hand, and funds available to us under our revolving credit facility. We may also fund our operations and potential costs related to the acceleration, future transformation initiatives such as product catalog expansion from other sources of capital, including sales of our equity and debt securities. Here we go. In December 2020, we established an at-the-market offering program that provides for the sale of shares of a Class A having an aggregate offering price of up to $100 million, which is nothing, by the way. That's barely scratches the surface with the current value that the stock is at. From time to time, through Jeffries, a sales agent. Through the date of this form, we have not sold any shares under that program. Since January 2021, we've been evaluating whether to increase the size of the ATM program and whether to potentially sell shares under the increased program during the course of fiscal 2021, primarily to fund the acceleration of our future transformation initiatives and general working capital needs. The timing depends on capital needs and alternative sources and costs of capital to us, market perceptions about us, and then the current trading price. Okay. Oh man, this is a lot to take in. Wow, okay. This is great. This tells you everything that they're thinking. It's all written out here. They're saying they're considering expand, because honestly, that shelf offering is nothing. $100 million is nothing for them at the current share price. They're considering increasing that and then using that to fund their growth in 2021. But then there's a huge give and take with that, because if they increase it, they dilute the shares, they give an exit for the shorts, and they lower the price. So short-term immediate would be devastating for the stock price. But it would be a very harsh rebound when people realize, okay, the short squeeze is definitely officially over now. And now they have all this money to operate, all this capital. And they're valued 10 times what the 100 times what they used to be worth. And then it would bounce back sharply, and then it would try to find the actual value of it at that point. A lot of people were pointing to today as the day of reckoning. But I would argue the day of reckoning is whenever this comes to pass. I mean, a split wouldn't do anything. It's the same value. Best of the rest. that would be cool, except I don't think shareholders would like to hear that they're getting a special dividend, because they're doing a turnaround story, and the last thing they want is GameStop to just give money away right now, even if that is their long term. Yeah, Jake, what I make of it is exactly what I said. I think the day of reckoning is when this all comes to pass, and that day is not today. I know GameStop tried to do an offering towards the end of last quarter, but they said the SEC did not allow them to because it was too close to earnings. So we know that they want to do it, but they could have announced it today, but they're not, because they know the second they announce it, that crushes the share price, because people know the short squeeze is done. They know the second that happens, the short squeeze is over. So GameStop has two options right now. Kill the momentum from the short squeeze and get all this money and use that money to grow the company. Or don't do an offering and always have the pressure upward of the short squeeze propelling your stock higher and higher while you're transforming your business. And you can't have it both ways. You can only do one or the other. I agree with that, John. Oh, he tweeted again? No worries, Jake. No worries. I hope it's just sleeping and not dead. But Ravena, you know what I'm saying, right? You're like, there's only one you can do. A stock split doesn't do anything though. A stock split retains the same value. Stock split is just to make the stock cheaper for other people to come and buy it, but no, I know what you're saying, but the problem with the stock split is after the squeeze is over, if it's completely squoze and the hedge funds exit, the stock price could fall. If they say they did like a 5-for-1 or an 8-for-1 and made the stock $20 a piece right now, then it would be 8 times lower. once the squeeze is over, it'd be back to a $2 stock, and I don't think they want it to. That's a bad image. I don't think a stock split would be the answer in this case, personally. But yeah, that's a very interesting circumstance. Very interesting. Thank you for bringing that up. I can't remember who did, but thank you. Well, I mean, nobody splits a falling or failing stock, but if they know in the close long term, like the 3-month to 6-month range from now, that the stock price will go down from where it is right now, they don't want to put themselves in that situation. I would imagine. I would guess. I could be wrong, but that's what I would guess. What's up, Krillcast? I am good. Better than issuing more shares. That would well, yeah, but a stock split doesn't do anything. It doesn't change anything. It leaves them exactly where they are. It just makes the stock more accessible, I guess. But I don't know. You can buy partial shares on so many sites now that I don't know if the whole stock split. I'm not a huge believer in that. So, what's it? Moonski? RGME? I don't see it here. Am I not in GME? Our GME? It's not loading right now. I love how Reddit just breaks sometimes. Yeah, there's nothing here. Click on the user. Okay, here we go. Thanks. Most likely it's just a bug, it says. Yeah, because that doesn't make any sense. Yeah. But thank you for bringing it up. But make sure you guys are subscribed if you are new to the channel. Subscribe, bell for notifications. This was an extremely successful stream. I mean, we still got 900 people in here. This is crazy. I might need to start doing these more often if this is the kind of crowd it brings in. Because I love doing this kind of stuff. It's just a matter of sometimes I feel like I'm just talking to the wall. Oh man. Yeah, you guys have been awesome tonight. This has been great. Quick recap on the earnings call. It was very quick. I think it was under 20 minutes. And it was just like no questions. They didn't allow any questions at the end. And they just made a few statements about where they're at and where they're going. A couple bullet points. And they said, thanks for tuning in. Goodbye now. Yeah, Z-Kang, I agree. Can you live stream you doing due diligence on companies? Maybe. The problem is I have a full-time job, guys, so it's hard to get this time off. Like, my job allows me to partition what I do throughout the day. So after the stream is over, I'm going to go back to work, and I have to do a bunch of the stuff that I put off that I could have been doing earlier, but I wanted to do the stream. So I have to balance everything. Now, if I put more money into GME, I could have retired, but that's a different story. No, I appreciate you guys. And I'm gonna leave it there. I don't want to run the stream too long. I feel like we've done a good amount. We've learned a lot. We've definitely researched a lot further than I was expecting to. Tomorrow should be very interesting. And I know you could say that literally any day for GameStop, but especially tomorrow. I'm going to wake up early against my better judgment and check my phone. I'm in California, so I'm West Coast time. So it's like 4 a.m. out here when the pre-market opens. And I'll probably be up from then because it's crazy. You guys are awesome. Thank you so much for the kind words and getting it to 16,000. Damn, I skipped right past 15. Today was wild. You guys, crazy. It's funny too. I've been doing YouTube for 3 years. If you guys are watching me back when I first made my video about GameStop, where I invested in it, I made a video saying why. I think if you search, instead of you searching, I'll leave you with it. Let me find it here. YouTube, why I'm investing. So I made a video why I'm investing in GameStop when it was at $4. And man, you should read some of the comments in there where people were just laughing me out of the room. And it's like, that's what you gotta do, is just stick to your guns on what you believe in. Don't listen to the haters. Right now, this video, this is from January 30th, 2020. So over a year ago. It was 14 months ago. It's got 3,000 views. It has 121 likes and 27 dislikes. And people were pouring on me. Thank you so much for the subs, guys. I really appreciate it. Check that video I just posted into the chat. I really wish... It's times like these, I wish people knew about me back then, because we could have all been very rich right now. Did Roaring Kitty delete all of his tweets? Let's see. That guy always hates on GameStop. That's so funny. No, they're all still there. They're all still there. Andrew Mo Money would love to co-stream with me. Give him a shout if you are interested. Okay, I don't think I'm familiar with him, but I mean, I'm never against collabs. Andrew Mo Money. Oh, yeah, I know him. Wow, very cool. I didn't know his channel name, but I definitely know that face. Very cool. Dude, we talked about your GameStop bets back when we interviewed in the fall of last year. Yeah, right, Krillcast? Good times. Exactly, Prison Fallen. I see people keep saying a shares audit. I don't know if that's even 100% feasible, how a callback works. I'm not going to try to pretend I do know. But I'd like to, again, put my faith in GameStop management right now. And if they felt like that was the best course of action, they would have already done it. So that tells me that it's not the best course of action. Now, if you asked me that before Ryan Cohen was there, I'd be like, I don't really trust GameStop management. Ryan Cohen's there, I trust GameStop management right now. Oh, yeah, Jack Spy. The comments in the video, they're great. They're great. Especially the ones that are hating on me. That one's actually a good one. I'm glad they bought some themselves. But, I mean, I think everybody now would have bought 450 shares at $4, knowing what happened to it. I would have bought a hell of a lot more if I had known. But, you know, again. Do you think you'll see stock trading the same after this all ends? Yeah, I do. This is in the grand scheme, there's always standouts and I guess, what's the word? Diamonds in the rough. But ultimately, the stock market's not going anywhere. They might, in this case, they might put rules and regulations on the hedge funds, but I doubt it. And if they are, they'd just be like slaps on the wrist type thing. But no, that's the stock market is a make your money, just like the world. Make your money while you can, because when you can't, it's bad. It's bad. I've been in the stock market when it's bad, and I've lost a lot of money in the stock market. I've been in the stock market when it's good, and I've made a lot of money in the stock market. So it's just I've learned the hard way. Only deal with what you're willing to lose, because it can disappear any second. The problem is, when things are going good, they'll use that fear to scare you away. when you could have made more money. So it is what it is. Okay, I'm going to stop. I know I said I'd stop the stream like 6 times. And someone said earlier, I have no exit strategy to the stream. Still got 778 people in here. But yeah, this was really fun. I'm really glad I did this stream. And again, I thank you guys. Seriously, you made this stream amazing. You drove it. You made me have the passion I needed for this, and I really appreciate you. So thank you. And again, one more time, if you're new, hit that subscribe bell for notifications, and check my backlog. I've made plenty of GameStop videos. So if you still want the stream to keep going, just watch some of my GameStop videos after this, because they're still very much true and accurate to this moment as well. So thank you guys so much again. And I'll leave it right there. And as always, you stay smashing.